Yes, good morning, and guys, promoted to day three of the DT class. Today, we're not going to count first few days we're counting. So today is day three, and we are looking at doing something new and something old again. So, what are we up to today? Starting off right now, I want to recap a little bit of what happened yesterday. We'll build on that. Yesterday we did a chapter which is called which income, guys? Exempt income. So we'll build a little on that. There are, I think, four or five very small exempt incomes. We'll involve Saif Ali Khan also here today's session. So we'll see all of that. And then exempt income comes to an end. There is one deduction also I'd want to do. I'll tell you why I'm doing that right now today. And once that is over, I think in the first half an hour that should get over. Then we'll comfortably move and march towards another new chapter, which is one of the heads of income. Important. And once we do that chapter, we also have sums in every chapter. Actually, we've not been doing because the sums are very simple. Basic concepts, the chapter and exempt incomes, both the chapters have sums. So once we finish, we'll also do sums today. And when we do sums, I'll tell you the source of the sums, where I've taken the sums from, where should you look at the sums from, and that's how the day progresses. The first day we met, we did about three case laws. Yesterday, we also did about three case laws. Today, again, we'll do about three case laws. So that's how we progress ahead. And if time permits, yesterday we saw one of the exam papers. Today, if time permits, we'll see another exam paper. Yes, if time permits. When will we tackle the exam papers? As in when we reach somewhere towards like 5, 7 chapters done, then from those chapters, whichever sums have come in the papers, we'll look at those papers as well. All right. So right now, just doing a small recap and then moving ahead. This is how I'd like to start my day. The first chapter was which concepts, guys? Basic concepts. In basic concepts, some things that are really new is what is a widely held company. And you know today, guys, what is a widely held company? Government, mutually listed, 25 non-cooperatives. They are the widely held companies. Then we also saw that PY, AY, you are absolutely sure there are incomes which are taxed in which year, guys? Previous year also, five incomes you already know. And then you know many rates of tax. I just want to recap rates of tax on companies because that's what starts the sum. So rates of tax on companies, if they say it's an Indian company, domestic company, then what is the rate of tax, guys? 30%. If last 2 years back it was 400 crores turnover, then it will become how much percent, guys? 25%. And for foreign companies, what is the rate, guys? 40. More or less, it's an Indian company in the exam. 2 and 5 are the surcharge rates. So for companies, it is what rate, guys? Then 7 and 12, and HEC is what rate? 4%. There are no slabs. Companies taxation rate is very simple. We have a new scheme. We will see that soon. This was basic concepts. We had done three case laws here. If you remember, guys, here there was a company called Honda Seal. Then there was a company called Saurashtra Cement. Then there was another company called Anand Mahle Filter System. So these were some concepts that we had done here. Next, guys, we read a chapter which is a very simple chapter which is called exempt income. The section mainly is section 10, which says that some incomes the government doesn't want to tax and they are putting them in section 10. And in section 10, let's just do a small recap. 10.1 is what? Agriculture. RAL, rural. UAL, urban. SB, sale and building. Rule 8, tea. Rule 7B, coffee. Rule 7A, rubber. And transfer is rule 7. And guys, scheme of partial integration applies to you as a student. No, it only applies if you have both incomes, agriculture income also and taxable income also. Only then scheme of partial integration applies. We've not started writing rates of tax. When we start writing rates of tax, we'll put all this scheme of partial integration and all there. Yes. Next, in agriculture income, after that, guys, we had another section which is called section 10.2, which is for HUF. Then we had 10.2A, share of profit. This I apply every year. Whenever I get share of my profit from partnership firm, I exempt it because the partnership firm has already paid tax on it. Next, 10.4.2, NRE. Next, guys, 10.5, that LTC. 10.6 is French people who are working in India, guys. Can we tax them? No, because they tax their people, so we need to exempt it. Good. When we pay allowances to our employees abroad, guys, that is exempt. Next, 10.10 BC, very calamity, very important. 10.10 guys, death, life insurance. Let's spend 2 minutes on this, guys. In the exam, you will see life insurance. You have to bifurcate them before 1st April 2023 and after on and after 1st April 2020. First, let's talk about before 1st April 2020. You have to only check one thing, which percentage? 10. If it's a very old policy, 20. Yes, so that's what you have to check. But if it's a new policy, and the exam will talk about newer policies because there are two things you have to check. First, 10%. If it's not 10%, taxable. What is 10%? What am I saying 10% is the premium that you pay. The money that you get back is taxable. And the second thing you have to check is the premium that you're paying on that policy, or collectively all the policies on or after 1st April. Guys, the premium should be up to how many lakh, guys? 5 lakh. The insurance should be a protection for your family. It should not become an investment. And hence the government says if you're rich enough to pay so much premium, you're rich enough to also pay tax. Yes, that's the logic of the government presenting. Then guys, we had some, and death we don't see anything. That is always exempt. Next we had something called Sukanya Samriddhi under 1011A. Next is 1012A and 1012B. Guys, there's a scheme called NPS, full form National Pension Scheme. It's like a bank account. Employer can put money. Who else can put money? Employee. What do you earn on it? Interest. And can you withdraw it? But guys, just like a bank account, unlike a bank account, the NPS money remains with the government. So the government is thankful and it gives a lot of exemption and deduction. They say if you remove your money before, what is before? You'll get an exemption up to 25%. But if you remove it after, you'll get exemption of 60. So which makes more sense? After. So because you get a bigger exemption. Next, if you put money in post office schemes, yeah, so 10, 15, 3,500. Yes. Scholarships is 16. MPs, MLAs 17. Awards like Gukesh Award is 17A. Next is 10, 18 was those Gallantry Award winners. 10, 19 was military personnel. 10, 26 AAA. Sikkim meals. At what age do people have children generally? 32. Then 1034A, guys, which is definitely something that you will see in your exam, because guys, buyback has now two things in the middle of the year. Before 1st October 2024, buyback was very simple. You celebrate, who pays the tax? Company. At what rate? 20% plus surcharge of 12% plus HEC of 4%. But after that, guys, on or after that, the government says, listen, it's your income, you will pay the tax. So this has been removed on or after 1st October 2024. And 1038 was, if it's an urban agriculture land, is it valuable? Yes. And if you sell it, there is tax. But if the government compulsory acquires it, the government says there is no tax. And guys, can I do a mortgage? Mortgage means I pay EMI to who? Bank. But can there be a reverse mortgage where the bank pays me money and of course I have to repay it? So that's a loan or liability, hence it's exempt under which section? 1043. That's been our time on the revision. Now guys, we move ahead to something new today. We'll spend just some time on exempt income and then exempt income will come. Alright. Let's talk about a very unique exempt income. Recently, at 6:47, while we are talking, there was a Bollywood actor who was taken to the hospital because someone stabbed him. Yes, we don't know who, what happened, but that person is which person is? Saif Ali Khan. So he's an actor. I don't know if you're aware of Bollywood and its stories, but this is Saif Ali Khan, and he is basically a prince. There is a place called Pataudi. His father was a prince of Pataudi, etc., and he's also now a prince, etc. So they have a whole guys full palace there. Yes, and that palace, guys, the government has made a rule. I don't know. I don't want to go into the background, but after independence, there were small rulers across India, and they had their own palaces. Yes, and the government had, while we took over all those palaces and we took over all their lands, we told them, listen, these palaces we'll give you. And the good part is these palaces, one palace. How many palaces? One. Per prince, per ruler, we'll give you one palace. On that, even if you have any incomes. Example, guys, most people what they've done. I'm from Rajasthan and Udaipur and Jodhpur. That's where I'm from. Both these places have palaces and they've been given to five-star hotels to run. I don't know if you're aware. And when you run these hotels, the government says only on one palace, even if there is income, we will consider it what, guys? Exempt. There's a section called Section 1019A, but this is only for how many palaces? One. And the condition is you should be staying in it. So basically, you should be staying in it partly also. Then the entire any income from that palace we consider as exempt. This was a gift from the government to them so that they would allow us to take over the land. Yes. Not very important, but something that is new. So section is what, guys? 1019A. Income from how many palaces? One palaces which is used for the purpose of residence, whether partly or fully, the entire amount will be exempt under section 1019. Are we okay with this, guys? Yes. Alright. The next one, guys, something new again. Guys, we're talking about colleges. What are we talking about? Colleges. And in colleges, we're also talking about hospitals. So there is a college, of course, we're not talking about Jain University or Jain College of Bangalore because they make a lot of money. We're talking about some other college, guys. Let's take a normal college which is not for profit. What is it? Not for profit. So the aim of the college only, guys, is that we don't want to make any profit. They're set up for not for profit, and it's mainly funded by the government. Why? Mainly means largely. Majority funding is by whom? The two conditions: not for profit, and mainly funded by whom? Government. Then up to turnover of 5 crore. Up to what turnover, guys? 5 crore. If they satisfy all these conditions that we don't want to tax them, they are completely everyone. A lot of colleges, guys, these colleges don't need to register as a trust at all. They don't need to do anything of that. As long as the turnover is up to, they're not for profit and they're funded by whom, guys? Government. Same thing with hospitals, guys. You tell me, not for profit, funded by whom? Government, and their turnover is up to how many crores? Then the profit will be. Guys, this is a section which is a section called 1023C, C for colleges. What is the section? 1023C, C for and hospitals. Guys, in the exam, there's a question, and this came as a case law kind of question, that there is a college or a hospital which is not registered as a trust under 12AB. We'll see that section ahead. But guys, do they need to register as a trust? No. They just have to be in existence, not for profit, mainly funded by the government, and their turnover should be up to how many crores? What if the turnover is 15 crores? Then guys, taxable. So what bigger colleges then they do, they apply for a trust, and then you get benefits of the trust. We'll see again. But here you don't need to apply for any trust. You're a small entity. We give you exemption. Are you okay with this? Not for profit, of course, you have to get an audit done for that. That your money has not been used for any. Basically, not for profit. Basically means, can you have profits? Yes, but the intention was not that, and you don't declare dividend, and you don't give out money to people who are promoters or owners. Yeah. Gross receipts, yes, turnover. So, okay, loosely, but turnover, gross receipts. They will not complicate it so much. They will just say that his turnover, gross receipts were 5 crores. Of course, technically there is little difference, but from an exam perspective, 5 crores, if its your turnover is up to 5 crore rupees, then it's exam. Alright, we go to the next one, guys. Guys, a lot of people across north of India are in the tea business. Which business, guys? Tea business. Now, guys, tea business as a country is very important because we are one of the highest exporters of tea. And hence, the government has created something called a tea board, guys. Which board? Tea board. People who get confused with what is a tea board, guys, what is BCCI? Cricket board. Same way, guys, to monitor over the tea business in India, the government has made a coffee board. In fact, they made tea board and a coffee board. And guys, they sometimes, in the times of need, they also give you subsidies, guys. What do they give? Subsidy. So if you receive a subsidy from which board? Tea board. Or you receive a subsidy from which board? Coffee board. That subsidy is completely exempt. There is a section called 1030 and section 1031. The sections are not important here, so I'm just removing it. But just remember, guys, subsidy from which board? And which board, guys? Coffee. There's a rubber board also. Any subsidy from all these boards is completely exempt. Everyone. All right. We move now ahead to anything else that I wanted to teach you. Yes. All right. Perfect. Guys, there is a concept called ULIP. Yes. Unit Linked Insurance Plan. All right. First, let's talk about that, and then I'll tell you why am I teaching you this, guys. Now, guys, what is unit linked insurance plan? I want to take insurance. I want to take insurance. So speak to my agent. The agent said, listen, yeah, Saurabh, you're saying in an old world, insurance is now linked with investment. I said, what about it? He says, I'll take every year some money from you. Let's say 1 lakh. How much? Out of that 1 lakh, 80,000 I will invest ahead in mutual fund. 80,000 I will invest in, and 20,000 I will pay premium. I'll manage it for you. So it's insurance also, investment also. Repeat, guys, insurance also. That's why it's called unit linked. Unit means mutual fund units. So unit linked insurance plans, please tell me what are the two things I'm getting? Insurance also and investment also. Yes, and guys, simple, it's like an insurance policy. If something happens to you, who gets money? I want more answers. Who gets money, guys? Family. And if nothing happens to you, what do you get? You get the investment plus the bonus, etc. back to you. Are we okay? This is called flip. It's basically combining two things. Just like a laptop can be a tab also. Sometimes you will fold it just like that. It's a two thing. Now the government made a rule here also, guys. Watch very carefully. They made the same rule of 10%. Remember 10%. Everyone. If the premium you're paying is 10% of sum assured, is the premium low? Then whenever you get the money back from this policy, it will be completely exempt. You know this already. Next, what is this? Death. Any amount received on death of the person is completely exempt. If it's high, taxable. So guys, can I say ULIP taxability is the same as life insurance taxable? Yes. Everyone, death, exempt. Low, exempt. High, taxable. Guys, low, all premiums have to be low. Even one premium is high, it is taxable. So guys, there's nothing different between a ULIP and a LIP. What is LIP? Life insurance policy. Except what I'm going to teach you now. The government realized that people are putting huge amounts of money and they are treating this insurance policy as a major investment. So the government put a full stop on that, and they did that, guys. Remember, for insurance policies, what was the amount? 5 lakh, and what was the date? 1st April 2023. In ULIP, guys, it came 2 years back. So ULIP 1st April 2021. That's one change. So insurance came later, ULIP came first. They said that on or after 1st April 2021, if your insurance premium is more than how many lakh? 2.5. Then guys, remember that. Then the amount that you receive will be taxable. So let's divide the class, everyone. This is LIP, this is ULIP. LIP, when does that change happen? Policy is taken on or after 1st April 2023. Year 1st April 2021. Here, what is the insurance amount? 5 lakh. Here, what is the insurance amount, guys? 2 lakh 50. Are we okay? Yeah. Recently, guys, a few days back when the budget came last Saturday, now, guys, ULIPs are completely taxed. That's 2.5 lakh, whatever. The new ULIP still today completely taxable and you get the money back. That's what the government has said. But of course, that does not apply to your exam, so don't worry. I'm just giving you a real life scenario as well. Okay, so this is what I wanted to teach you here on the different exempt incomes. Let's recap what we've done. Guys, ruler one residence is exempt under which section? 1098. Guys, 1023 CC for what? Colleges and hospitals. Turnover up to how many crore? 5 crore, but should be funded by the and should be not for profit. Next, guys, T board and which other board? Coffee board and which other board? Rubber board. When they pay money, is it exempt, guys? Yes. And we also saw, which is the last one that we saw? Yes. ULIP is a part of 1010D only. I could not teach you yesterday because I didn't want to confuse you both on the same day. So yesterday we heard about LIP, today we are hearing about ULIP. Are we okay? Not a very popular measure, guys, ULIP, because they are more expensive. So people rather take life insurance separately and they take mutual funds separately. All right. So this is where we end our discussion on this. Now, exempt incomes will come again. In non-resident taxation, there are some income which are exempt. In equalization levy, there is chapter 1 exempt income. So, majorly exempt incomes are here, but particular to some chapters, there will be more exempt incomes as and when we come across those chapters. Yes. So, this is where our exempt income comes to a complete end. Let's finish writing. Yesterday, guys, we had written something. Yes. 1060. Okay, we write. It's just scholarships. If you get any scholarships from the government, etc., they're exempt. We'll write about it. All right. Let's start, guys, everyone. Let's pick it up from where we left yesterday, exempt incomes. Ideally, guys, I would have wished to finish this yesterday only, but we missed it. 1034A, guys, check everyone. Have we written this? Yes. All right. Let's move ahead to the next one. All right. This is section 1037. There's no shortcut for it, but manage. This is UAL. Selling UAL is taxable, but compulsory acquisition of UAL is exempt. Okay, you are an individual, used for agri purpose in the last few years. Just putting both the scenarios. If you sell the UL, it's taxable. If it's compulsory acquisition, then exempt. If two conditions, individuals in nature, and it should be used for agri purpose in the last one. Section 1043. Amount received under RM mortgage scheme. It's loan section 1043. Practically, guys, I don't know any friend, any cousin, any relative, or any client who's done ever an RMS. Because in India, we like to give our properties to our children, don't like to give it to a bank. 10, 16. Since we've not written it, we'll write it. Scholarships from government, trust, dues are. So if you do really well, ICI gives you a scholarship, guys, and of course, scholarship is not taxable. Of course, the amount is very small by ICI, but bigger scholarships also not taxable, but they should be from the government, trust, NGOs, etc. Yes. Hmm. GTO, let's say they give a scholarship, exempt. Because trust, taxable. Then, of course, it's taxable, but because of basic exemption limit, it might not be taxed, but otherwise it's taxable. So generally, let's say I want to give a student a scholarship. I don't directly give a scholarship. I give the money to a trust, and the trust gives a scholarship because then it's taxed. Yes. Otherwise, what will happen is all my clients, they're now paying me fees. They're paying me scholarships. So it can be manipulated. And hence they say the person who's giving should be a trust, NGO, etc. Only then. All right. Next one, guys, the ruler, section 1090. First file rulers. Just a minute. Earlier, basically, rulers which are not now, rulers, but older rulers. Of first file basically means former. Former ruler will be exempt if used for residential purpose. Okay. Next one is important. 1023C. Incomes of colleges. A, not for profit. Usually funded by cost receipts. Restaurant 2 5 crores. Then A, 1023C also has some other places like there's PM Cares Fund. Have you heard of PM Cares Fund? Yes, Swachh Ganga Fund. Yes, Clean Ganga, Swachh Bharat Abhiyan. All these funds also collect money, but they are also exempted in this is same section. But mainly it's colleges and hospitals. So unlike colleges and hospitals, there should be not for profit, majorly funded by the government, and gross receipts turnover up to 5 crores. There are different sections. So I'm not writing the section. Just write amounts received as subsidy. Tea, coffee, rubber board are the government can notify more boards, but right now there are these three boards: tea, coffee, and rubber boards. Actually, this is equivalent to a scholarship which a student gets. These boards give subsidy. If you're going to tax subsidy, how will these people use their money? Because some part will go towards tax. Right? They pay exempt. And that is about it. So this is where I'm putting an end. But of course, exemptions, guys, there is nothing like an end to exemption. There are different exemptions in different chapters also. When we move to different chapters like NR taxation, equalization levy, we'll come across those exemptions as well. So this is ideally something that I wanted to do yesterday, but we didn't have the time. So guys, exemptions, where do they go in the computation of income? Excluded. They don't come in the computation only, so we don't put them also. But there is something that I'm going to teach you now, which is in the part of computation of income. Guys, when we reach a number called GTI, right? Which number? GTI. GTI is what? Gross total income, guys. There are mainly two deductions that happen, guys. One you already know, deduction under chapter 6A. People are doing tax work in office, guys. You know, when the clients give you form 80C, 80D, all these proofs, etc., you take deduction. And there is another deduction, which is deduction under section 10AA. This deduction is what I'm going to talk about. Of course, this comes in deduction chapter, but we're doing it right now only and finishing it because it's part of something that I want to understand right now before PG. Everyone okay with this? Yes. Guys, what is the section? 10AA. Let's spend the next 10 minutes. This is something that you have learned in Inter. I'll add a few more layers and we'll be done with it. Yes. Everyone, while driving from Mumbai to Bangalore, guys, I came across a place near Goa which was declared as an SEZ, guys. What is it? Special Economic Zone. I was very curious to know what this SEZ is, and they said listen, a lot of IT companies, which companies, which basically don't want to function in expensive places like Bangalore, they were invited to establish an office in SEZ. And let's take an IT company, guys. Let's call it IT company only. And this IT company, guys, established an office where in SEZ. There are employees working in an SEZ. They come in the SEZ, they work there. And why will someone go to an SEZ? Because the government says, listen, I'd like to give you what, guys? Benefit, everyone. Many benefits. Electricity is cheaper. Labor also, there are many benefits. And mainly, it is a tax benefit. So what is a tax benefit? Let's talk about this SEZ unit, guys, and this IT company. And let's call this IT company W, guys, Wipro. Let's call this company which one? Wipro. All right. So this is the SEZ and this is Wipro's office, and let's see what Wipro does. Now, when Wipro is doing software services from there, they give software services abroad. What are they doing? Export. So what are they doing, guys? Export of what? Services. Now the government says, listen here, Wipro, thank you so much for doing this. Thank you first for coming to SEZ, and thank you second for doing export, because when you export, what do you get? Forex. So thank you for doing both of that, and because you're doing both of that, we'd like to give you a tax benefit. Now, Wipro is very curious to know what benefit they will get. By the way, Wipro has one unit in this place which is called what? They also have multiple units in an area called DTA, domestic tariff area. So, guys, do they have both presence? Yes, but the benefit is only for SEZ. Everyone, hear carefully. At CA final level, all this should be easily understood. Now, guys, they ask Wipro, can you tell me the profit of this SEZ unit? They say, we'll tell you details. So, guys, this SEZ unit had a profit of 10 crores. What is the profit? 10 crores. They had a turnover. Which unit? Only SEZ unit I'm talking about. They had a turnover of 50 crore rupees and they had a profit of 10 crore rupees out of that, guys. Which unit is this, guys? Only SEZ. And they said, what about your DTA units? They said all the DTA units totally had a profit of 90 crores. Guys, how much profit? 90 crores. And they had a turnover of 900 crores. All right. Comment said, no problem. This is the detail. Now let's move ahead in the detail. Guys, is Wipro doing a business of software services? Yes, everyone, more participation. Are they doing a business? So first, which room opens up for them? PGBP. Everyone, because they're doing a business, whether it's from SEZ or outside, they're doing a business. So what is the profit, guys? 10 crores. Excellent. What else is a profit? 90. So total profit is how much, guys? 100. So in PGBP, will the government first want to tax them on 100 crores? Yes. Yes. Guys, people, understand what I'm telling you. Don't straight go to deduction, guys. The government wants to tax them on how many crores, guys? 100. Guys, first which unit? SEZ, then which unit? DTA. Basically, that means whatever profit of your company is will go under which head of income? PGBP. Then the government says, listen, yeah, although I wanted to tax you, but because you went to which area? I want to give you a deduction, but deduction will not happen here. This number will go where? GTI. And from GTI, guys, we'd like to give you a deduction under 10AA, guys. What is the section? 10AA. Everyone okay? So please tell me which profit will go to PGBP? All. Guys, repeat. Which profit will go? All. But only for which unit? SEZ unit, we'd like to give you what, guys? Deduction. So this Wipro company got very happy. They said, listen, government, can you tell me what is the deduction? They said, listen, first you count the number of years since you begun your software export. So they say we went to SEZ and we began software export in the year 2017. Which year, guys? So 2017 to for the first 5 years. How many years, guys? 5. So this is 17, 18. Next. 18, 19. Next. 19, 20. Next. 20, 21. Next. 20, 20, 21 and 21, 22. Are these 5 years, guys? For these 5 years, whatever is your profit, we will give you 100% deduction. How much percent deduction, guys? I'll tell you the mathematics how to do it, but for how many years? 5 years. Let's do the calculation, guys. The calculation is called SEZP, guys. What is the calculation called? SEZPE. Everyone. Of the SEZ unit, tell me the profit. Go and tell me the profit, guys. What is the profit? 10 crores. Into how much did you export, guys? What is your turnover? 50. And let's say out of 50 crores, you exported 40 crores. So what is your export turnover, guys? 40 divided by 50, basically, which how much percent? 80%. What percent is it? 80%. I want more participation. Everyone, guys, people who do Vedic maths, don't do Vedic maths and look around, guys. Hear me out. Everyone, what is this? SEZ? PE. What is P for? Profit is how many crores? 10 crores. What is the export turnover? 40. And what is the total turnover? 50 crores. Are we okay? If you do the percentage, it works out to be 80% of 10 crores. How much? 8. The government says, listen, 8 crores, I don't want to tax you. I'll give you it. Okay. Guys, please tell me in PGBP which profit goes? All. But in the deduction, guys, you will get a deduction only based on SEZ. Yes, everyone. So this will happen for how many years? Every year you will calculate your SEZP. Can you repeat what is SEZP? SEZ's profit into export upon total turn. Which unit? SEZ. Next year also you will calculate the same for how many years, guys? 5. Now, guys, the 5 years are over. Now you come to the next 5 years. Guys, next 5 years will be which year? 22, 23 onwards for how many years, guys? 5 years. Again, the government says, listen, calculate what? SEZP. Again, let's put the same numbers. Profit, 10 crore. Export turnover, 40 crores total turnover. So how much is that? 8. But the government says, listen, I want to give you a deduction, but because it's the next 5 years, I can't give you a whole deduction. I'll give you 50%. How much percent? So out of 8 crores, I'll give you how many crores, guys? 4. So first 5 years. 100%. Repeat, guys. First 5 years. Next 5 years. And guys, the last 5 years. Whatever are the last 5 years, the government says, listen, again, we'll calculate which number? SEZP. Again, we'll get, let's say, which number? We again give you how much deduction? 50%, but with a condition. So I want to repeat this. How many years is the benefit for? 15. First 5 years. Next 5 years. And next 5 years, 50%, but with a condition. They said, listen, how much deduction do you want? Put this 4 crore in a separate bank. Go to ICICI Bank, put 4 crore in a separate bank account because are you old now? You need more plant and machinery. What do you need, guys? More. So put this money in a separate bank account and use that money in the next 3 years to buy new plant and machinery. Are we okay with this, guys? Yes. So how much is the deduction? So you went and put a special bank account you made in ICICI Bank example, and you put 3 crores in. Someone said, listen, you want a deduction of how many crores? Then put 4. If you put 3, we'll give you deduction only of 3. Whichever is lower. Whichever is lower. Guys, what if 4 I put full 4? Yes, I put 5. Buy new plant and machine in the next 3 years. Guys, with this 3 crores, you bought a Lamborghini car. I'm like, what are you doing? You can't use it for personal purpose. You can't use it for. You can't send it abroad. You can't declare it. You have to use it for which purpose? Plant and machinery. Are we okay with for which unit? SEZ. Are we okay with this? Very, very simple. Don't worry. Let's not complicate it. Let's summarize it. So, guys, this is an awesome area. Which area? The deduction is under which section? 10AA. Now let's recollect, guys, for the first how many years? 5 years. Then how many years? And then how many years, guys? So totally benefit is for how many years? 15. Here how much percent? Here how much percent? And here how much percent? 50%, but with a condition. And every year you have to only calculate one thing. SEZ, P. P is profit. E is export turnover divided by total turnover. Are we okay with this, guys? And can we repeat this last condition? Whatever is the deduction, you have to put that money in a separate account called reinvestment reserve account. Which account, guys? Reinvestment reserve account. And that account has to be used for how many years? To buy new. Sir, I forgot to buy a new plan. Then no problem. After 3 years, whenever you forget, we'll add it back to your income. Sir, I bought a Lamborghini worth 3 crore. Wrong. So misutilization. What is it called? Or non-utilization will be punished. They will add it back to your income. Are we okay with this, guys? You can't use it for which purpose? Personal. You can't declare dividend and you can't send the money. Are we okay with this? Section is 10A. Now reality check, guys. This section cannot be used today fresh. That means, guys, you had to start manufacturing or export in the year 2019-20, which year, guys? Then, sir, why are we discussing this section today? Because a company which started in 1920, will the 15 years be going on right now? Yes. Are we okay with it? Now you tell me, guys. When I export software, when am I exporting? Software. And can it be export of laptop also? Yes. Can it be export of mobiles also? Can be export of anything, goods or services. But when you export, guys, there are three things called FIT. Can we repeat? FIT. One is freight. One is freight. Guys, what is F? Freight. Guys, when you export laptops, mobiles, etc., are there some shipping charges also? Yes. Don't include that. Guys, don't include that. Everyone. What is I for? And T for telecom charges. Please tell me. Freight, insurance, and telecom. Guys, everyone, hear me out. These three charges, will you charge your clients? Yes, everyone. I'm exporting laptops from that SEZ abroad. Will I charge freight to my clients? But you cannot include that number in the total. So three things you have to ignore: freight, insurance, and telecom charges. I'm giving you an example, guys. How much was your export? What is the total turnover? But out of that, 2 crores was freight. So minus 2, minus 2. Are we okay with this, guys? So freight, insurance, and telecom charges you have to minus. And why is the government so happy with this SEZ? Because they're exporting. What are they doing, guys? Exporting. So the government has said that, listen, if you're exporting, get the export proceeds in India within 6 months. Within how many? From which date? Your birthday, my birthday, from the end of the year. From the end of the year, within how many months, guys? 6 months, the money should be received in India. Guys, how much was your export turnover? 40. Total turnover? 50. Within 6 months, you could only bring 32 crores. Then this will reduce by 8. This will reduce by 8. Are we okay with this? Hey, some of you guys are not participating or watching is very dangerous. I've seen many students watch tax. No, guys. It's not some IPL season. Yes, you have to be a part of this. Alright. Can we repeat section? 10AA. But first tell me, guys, where does this 10A deduction come in? After which number? GPI. You can deduction, but only if you go to which unit? And from there, are you doing domestic also? Plus you're doing export also. What if I stop export? Then this benefit only stops, guys. Yes, alright. Let's calculate, guys. First 5 years. Next 5 years. And last 5 years, 50% with the condition that the money should be put in a reinvestment reserve account. Misutilization, added. Non-utilization, add. But for non-utilization, they'll wait for at least 3 years. Good, guys, very good. Dividend, no. Sending abroad, no. Personal purposes, no. And two extra conditions, guys. What is fit? Freight, insurance. You can charge your clients. See, when you're exporting a laptop, obviously you can charge freight to your client, insurance, but don't add it to this number. I'll give you the logic now. Because when you add freight and insurance, what happens to the turnover? Increases. And when this increases, your number also will increase. And deduction will also increase. So the government doesn't want to. So hence, it has to be excluded. And the amount has to be received in India within how much time? 6 months. Are we okay? This is section 10A. Alright. Yes. Common definition. Definition of export we'll see ahead, but right now it's purely export. So from India, it should be going outside India. Not like the indirect tax export, but yeah. So within India, if you supply to an SEZ unit, etc., but that definition is not here. That's an indirect taxes. They've not covered the definition here in DT. So in DT, that definition is only not there. Full portion is not there. I know what from IDT you're saying that, even if you supply to SEZ deemed export, etc., but no. Here they will clearly say that if it's an export, there will be a reduction. Only outside. It should be crossing the water and it should be going outside. Let's add a small note on this. Guys, this will come in after which head? GTI. But we're writing it here so that later on we have only one deduction under chapter 6A. Also, I need this deduction for PGP, and hence I'm doing this deduction today. Yes, let's write everyone. Alright, so this is basically a small deduction. After exemptions, guys, you will write deduction from gross total income. There are two deductions. Chapter 6A. We'll discuss later. Second is deduction. Section 10, capital A, capital. This deduction will be given SEZ units for goods or services. Deduction will be given CZPE. Anyone, guys, what is P? Profit. And what is E? Export turnover divided by total turnover. That is profit. Put turnover first 5 years. First 5 years. 5 years. %. 3% subject to 5 years. Put up. Yes. Positive. In RRA. Any idea what is RRA? Reinvestment Reserve Account. Don't be lazy, write the full form here only, because then you'll Google it. Google RRA, guys. Many things will turn up. Reinvestment Reserve Account. Such RRA we use. Guys, it has to be new plant and machine for SEZ. Next 3 years. Then not use this money for the purposes. I'll tell you how this works the next 3 years, guys. Hear me out. I think you should be able to understand. I'm in the 11th year, guys. Everyone, I'm in the 11th year. Guys, will I get a deduction? Yes, 4 crore rupees. Guys, what is my deduction? 4 crore. So I have to put this money in which account? RRA. I've taken 4 crores, put in the RRA, which is year am I in? 11th year. Now, guys, from 11th year, in the next how many years? That 4 crore has to be invested. Next year is which year? 12th. Again, 12th year, guys, let's say 5 crore. I put 5 crores. So the 5 crore 3 years will start from 12th year. It's like your BCom, guys. Your BCom will start from this year. Your cousin is starting a BCom next year. When will her BCom end? After 3 years. So that same way, the money, whenever you put the money, it has to be used within the next 3 years from the date you put the money. Yes, are we okay with that? And no dividend, no personal use, and no amount to be sent abroad. Just want to give that fit amount. Yes. Yeah. No problem. Yes. Yes. No, before you file your return of income, you have to put the deposit the money. Yes. So how will you tell the government to deposit the money? So basically, the year where this deduction you want to take, before you file the return, you put the money in the reinvestment reserve account. And the day you put it, from that day, 3 years they will see you have to use the money. But what I'm saying is 11th year, 3 years will be different. 12th year, 3 years will be different. So count individually whenever you put that money, then money has to be used. If you want the deduction, if let's say in the fifth, you're in the 15th year, do you still want the deduction? Then put the money and the next 3 years use it. That correct, right? Everyone okay? Yes. Why is that? No, I didn't get your point. What are you saying? Yes. Yes. Yeah. Because if you don't deposit, you won't get deduction. See, I'll tell you, I'm genuinely a person who wants to buy new plant and machinery. 15 years means my plant and machinery is old. Now see the benefit. Think like a businessman. Did you get a deduction of 4 crore? 4 crore into 30%. How much minimum saving? 1.2 crore you already saved. Someone has given you 1.2 crore rupees. So you're buying new plant and machinery for how many crore? 4. You effectively got a discount of 1.2. Plus you'll get on the new plant and machinery depreciation. So there are so many benefits. A genuine guy who wants to continue his business, why will he not want to invest? And if you don't want to invest, don't get the reduction in the last 5 years. Yes. Now tell me no. 4 crore is just an example. Yeah, yeah. No, no. For 4 crores that year. Next year, whatever is the amount, that amount you deposit. Every year is different, no? Are you getting it? Okay, no problem. Guys, just recapping what he's trying to say. Guys, everyone on the screen. 11th year, my SEZP is 4 crore. How much? So how much do I need to deposit? 4 crore. In the 12th year, guys, my SEZP is 1 crore. How much I need to deposit? 1 crore. I don't need to deposit 4 crore every year. 13th year, guys, my SEZP is 1.8 crore. Then how much do I need to deposit? 1.8. Are we getting it? Every year is separate. Every year the calculation has to be separate. Alright. We'll take up more questions after we write these two additional points. On the screen, guys, additional points, please. First additional point, FIT. Guys, what is FIT? Freight, insurance and telecom. Export and total turnover of SEZ unit. Exclude, this word is important. Exclude freight, insurance, telecom charge. First point, freight, insurance and telecom. Export and total turnover of SEZ unit should exclude freight, insurance and telecom charge. Second, foreign proceeds we received in India within how many months, guys? 6 months. This generally is 30th September, but I'm not writing that date. Just write 6 months from the end of the year. Yes. Yep. Yeah. Yeah. Can you cumulatively? Of course, you can cumulatively, as long as you're meeting the timelines. So let's say first year, second year, third year, all the amount has been deposited, and immediately you buy that 10 crore rupees. Perfectly okay. I'll tell you how to remember it. Your phone recharge. You recharge your phone today. How long will it last? Let's say 1 year. Your parents recharge your phone next month. How long will it last? So somewhere towards the 11th month, can you all recharge your phone together also after that? Yes, you can. Same way here also, you can combine the amounts as long as within 3 years you're investing it to buy a new panel machine. But yeah, of course, any bank you deposit money, you get interest. Taxable under IFOS always. If there is income, there will be tax. Yes, simple. Guys, whatever money you put in the bank, that have interest and interest will be taxable. Yes, question. So this is where I'm ending this SEZ discussion. We can discuss more and we'll have practical questions also on it. So no problem with that. Here we go. All right. So now that we're done with these two chapters, guys, what I was thinking is we'll spend some time looking at the questions. Guys, the questions of this chapter are pretty basic. But first, let me tell you a little about where I'm getting my questions from. So this book that you have, guys, every chapter first has the concept. At the end of the concepts, there are some questions. Where are my questions from? I've taken the questions from ICI material. When you go through the material in between, there are illustrations. So I've taken all of that also and made my question. So my entire question book is basically based on ICI material plus ICI papers. Yes. The first chapter, second chapter are very basic questions. We'll have a look at them. And then we'll start with the new head of income. Yes. So let's spend the next 10 or 15 minutes looking at the questions. Take your books out, guys, everyone. Let's inaugurate them. We've not used them yet. This is where we are. Let's take the first basic concepts. There are 6 questions. Let's see what these 6 questions talk about. This is page number 15, question number 1. Guys, how we do the question, everyone hear me out because it's the first time we're looking at questions and I've done this at different levels. I do the same. Guys, every time you read a question, yes, 1 minute, guys, just 1 minute. Every time you read a question, my idea is, okay, you're reading it today, which is great, but how will you look at so many questions one day before the exam? Again, not possible. So every time we read a question and we discuss a question, we mark an E on it. What is E for? Easy. Guys, E for easy. If it's easy. If it's something that is different, difficult, then you write a D. D means different, do it again. So you need to do that again. And if it's a repeat question, let's say 2 questions are similar, you write a R. R for repeat. Now what happens, guys, closer towards the exam, let's say before the exam, you watch the basic concept video and you're looking at this chapter. Then in this chapter, the moment you see E, skip that question. The moment you see R, skip that question. So only focus on which questions? D questions. Yes. So every question we'll try and mark an E, D or R. Most questions we'll be writing it in our books. Actually, all questions we'll be writing. If it's very simple, then we'll refer it to our Q&A book. If it's something that is tabulated, etc., then I would want to write it. Yes. Let's first discuss question number 1. Everyone take a pencil. That's how you read the question. Everyone. I don't want any blank pages. Guys, I'll tell you what happens is closer towards the exam when you open your book and the book is all blank, you'll feel underconfident. When the book is all marked, highlighted, you know you've been there before. Yes, so take a pencil and read with me. Let's read question number 1. Tick mark the question and start reading. Mr. Bhargava is a leading advocate on corporate law. Decided to reduce his practice and to accept briefs. Briefs basically mean cases only for paying his taxes and making charities with the fees received on such cases. In a particular case, he agreed to appear to defend one company in the Supreme Court on the condition that he would be provided with how many lakhs? 5 lakhs for a public charitable trust that he would create. He defended the company and was paid the sum by the company. He created trust of that sum by executing a trust deed. Decide whether the amount received by Mr. Bhargava is accessible in his hands as income from his profession. It's a very simple question. Is he a lawyer? And how much is he earning? 5 crore. If his income, there will be tax. Now the only question is, guys, is he applying this money towards a trust? Yes. Now the government says this is application of money. What is this? An application is taxable 80. Guys, what you do with the income, it's your point. But I'm going to tax it because this is what, guys? Application of it. Are we okay with this, guys, everyone? So very simple. This is the application of income. Everyone read the answer and underline the main parts of the answer, guys. The third line or the third last line. This case is one of application of professional income. Guys, underline the word application. And it is not diversion of income by overriding title. Therefore, the amount received by Mr. Bhargava is definitely chargeable to tax under the. Everyone okay? Open to any discussion, guys. This is me telling EY that listen, EY, you give me salary, but I'm going to donate my salary, so salary should not be taxed. No, that is what application. Application is always taxable. Let's look at the second question. When we write it, we'll write EDR, whatever it is. Please tick mark the second question. Read just like you read the first one. XYZ Limited is a company which took over the running business of a sole proprietor by a sale deed. As for the sale deed, XYZ Limited undertook to pay overriding charges of 15,000 per annum to the wife of the sole proprietor in addition to the sale considered. The sale deed also specifically mentioned that the amount was charged on the net profits of XYZ Limited, who had accepted the obligation as a condition of purchase. Is the payment of overriding charges by XYZ Limited to his wife in the nature of diversion of income or application of income? Let's summarize this, guys. Is there a sole proprietor? He's selling this business to a company. Is he taking some sale charges? Plus, he's made a condition that every year you have to pay, every month you have to pay some money to my wife. Is this application or is this diversion? What I mean is, who's paying the money? Company. So, will the company get a deduction? Yes. And who will be taxed on it, guys? The wife. So, guys, this is the case of diversion of income. What is the case of diversion? Diversion because, guys, it's not that you received the money and applied it. Before that, only it's been diverted. And guys, diversion also is taxed, but not in the hands of the company. Who's getting this money? Wife. She will pay tax on it. So, what is this case of diversion? Please read the second last line. It is clearly a case of diversion of income by overriding charge and not mere application of income. Alright. The third one is something like a repeat. You will read it and then you will see whether it's diversion or application. Over to you, please. Read, underline the words. Guys, who's running the business? The father. He had how many sons? And he had put a condition that after me, you will get the business on the condition that 20%, whatever percent goes to my wife. Everyone, is this condition? Have they agreed to it? And have they paid it? Now, please tell me, guys, is this application of income or diversion? Diversion. Now, I have a second question. Diversion means a partnership firm is paying to whom? Now, will the partnership firm be taxed on this income? No. But it's not that it will not be taxed. Who will pay the tax, guys? The wife. Are we okay? So I'm not saying diversion is never taxed, guys, but diversion is not taxed by the person who's paying. It will be taxed by the person who's receiving. Again, guys, this is again diversion. Read the last few lines, please. Such income stands diverted to the other person, as such other person has better title on such income than the title of the assessee. The firm might have received the said amount, but it is so received for on behalf of Miss Lakshmi, who possesses the overriding title. Therefore, the amount paid to Lakshmi should be excluded from the income of the firm. Should be taxed in whose hands, guys? Lakshmi's hands. Yes. Hmm. I know, but getting inducted as a partner, you have other responsibilities, etc. Some people don't want their spouses to have those kind of responsibilities or roles to play. They just want that person to get the money without any complication. So this is a very common thing. Lots of people have this condition when they sell their business that listen, my spouse should get some money and without any role. So that is basically you get a deduction for that amount and they get an income on that without paying a money. Yeah. Yeah, but there's no evasion of tax. There's no evasion of tax. Yes, you can make use of basic exemption, but yeah, you can. But then it should be conditional like this. It should be conditional like this that there is some event which happened. They can go into the details and they can check whether you've tried to manipulate it or actually conditional. Good point there. But this is perfectly valid. They will get a deduction and that this income will be included in her name, and she can use a basic exemption. Yes, overriding title. Over and above your title, she has a better title. Basically, she deserves the money more than you deserve the money. That's about it. Perfect, guys. Next is question number 4. Everyone, start reading question number 4. We discuss the 5, 6 question and then we write. First chapter questions are more conceptual, guys. They won't be asked in the exam, but just conceptual. Anand was the Karta of an HUF. He died leaving his major son Prem, his widow, that means the spouse, his grandmother and brother's wife. So all women, 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 and only one major son. And the HUF retained its status as such, and the surviving persons would become co-owners. What happens in this case? So guys, can a HUF be made with just one male member also? Yes. Guys, you need just one male member and the family members to create an HUF. So there it is, guys. Under the Hindu system of law, a joint family may consist of a single male member and the widows of the deceased male members. It does not mandate that it should consist of at least two male members. So guys, can they continue the status of HUF? Yes. All right. Yes. Yes. Does he automatically become a Karta? Yes. He becomes a Karta. As a co-pastor. And even a husband and wife can start a HUF. Guys, you don't need a huge family, guys, to start an HUF. Even husband and wife can start an HUF. The husband is a Karta, the wife is a co-pastor, and they can continue with it. Guys, before 2005, before which year? I don't know. It's funny to even think about it. Women members did not have any right in the HUF. They were not a part of. They could not even become Karta co-pastors also. So that changed in 2005. Now they've become equal part and they're co-pastors. Also, did you know, guys, rates of tax below 60 years? Do we have different slabs? 60 years or more, 80 years or more. Did you know a few years back there were different slabs for men and different slabs for women? Yes, yes. Yeah, more beneficial. So higher slabs for women. So women up to a certain amount would not pay taxes. Yes, this is very recent. I think this is a few years back only, guys. This was there, and then they realized. And who opposed it? Women. Yes, women opposed it, saying that no, we want equality. We want all of. So a lot of women MPs opposed it, and now it's all equal. Yes. Yeah. It's a yeah. Yeah. Yeah, he can change switch sides very quickly. Yeah. All right. All right, that's question number 5 for you, everyone. Total 6 questions. This is question number 5. But before that, I want to recap something, guys. If there's any unexplained expense, or any unexplained investment, or any unexplained money, or any loan given on hundi other than account pay check, is the government upset? They tax you at what rate? 60. Remember that plus 25% surcharge. Yes. Yeah. This question is around that. Read the question well. Look at the account pay check. Yes. Read underline, guys. Underline the word bearer check while you read, guys. Tick mark. Every question should be tick marked. You should know that you've been to this question before. Underline bearer check. Underline account pay check. Underline hundi. Now, please tell me, guys, is there some loan which is happening? Yes. Guys, how did you get the loan? Bearer check. How many thousand? 25. But how did you get the loan back? Account paycheck. So is that okay? So one part of the leg is okay, one part is not okay. So the government says this part which is given by which check? Bearer. Guys, anyone knows the difference between bearer check and account paycheck? Anyone? Yes, guys, this is a check. If I just write self and I give it to anyone, guys, bearer check is like money. Can they go in the bank and withdraw cash? Yes. Guys, I'm putting another check. You tell me, guys. I'm putting the name Sourabh Mutha here and I'm putting two arrows here. This is called cross check. Guys, what is this check called? Guys, who can deposit it? I. Can I give it to her? Yes. Can she give it to her? Yes. Guys, cross check can be endorsed. Repeat. Cross check can be. Only thing, if you don't want anyone to get this check except me, guys, then you have to write here what? Account pay. Now, guys, if my name is written here, who can deposit the check? Only me. Can I give it to her this check? No. She can't deposit. So everyone, three types of checks. First, bearer check is like cash. Next, cross check can be circulated. The only proof of direct payment is account pay check. Now, guys, here there is a section. Of course, a section I've not taught you. When I teach you, I'll tell you. But you know the rule, guys. Guys, here in this case, Mr. C had borrowed how much? By way of bearer check. Therefore, it shall be deemed to be the income of Mr. C for the previous year 24-25. Since the repayment of the check has been done by which, guys? On paycheck, will this section apply? Guys, what is this section? I told you different unexplained expense. So all those have different section. Unexplained expense has 69C. Unexplained asset or income has 69A. And Hundi has 69D. But ultimately, all of them boil down to which section, guys? 115B. Is everyone okay with this? So we'll talk about this and we'll quote this section when we write. We'll be writing all these six very briefly in our books as well. And let's look at the last question, guys. Question number 6. Yes. Everyone, stop for a minute and understand this. Guys, remember the Ranveer Singh? Yes, everyone. Remember the Ranveer Singh expense? Guys, did you have too much income? No. But still you spent 10 crore on Ranveer Singh performance, guys. Was it an unexplained expense? Repeat, unexplained. The government taxes you at what rate, guys? 60%. You know the concept. Now, guys, as a business, can I have an unexplained expense? Yes. If the government catches me and listen, this expense is unexplained, they can apply 115 BP. I don't want to tell you what is 115 BP, you know it. After that, can I take a deduction of that expense? Guys, 1 minute, hear me out. Is there an unexplained expense? Yes or no? Yes. Will the government tax me at 60%, etc.? Can I take a deduction of that expense? The government says, see, I got it. If you wanted an expense, if you wanted to take deduction of that expense, you should have claimed it yourself. If I catch you later, guys, you can't take deduction. Are we okay with this, guys? Are we very clear about it? Yes. Let's read this question in the light of what we just discussed. The assessing officer found during the course of assessment of a firm that it had paid rent in respect of a business premises amounting to how much? 60,000, which had not been debited in the books of accounts. The firm did not explain, guys. Underline this word, did not explain the source of payment of rent. The assessing officer proposes to make an addition of 60,000 in the hands of the firm. The firm claims that even if the addition is made, the sum of 60,000 should be allowed as a deduction. Guys, what do you think? Will it be allowed as a deduction? No. To claim deduction, you should have claimed it yourself. If it's in the course of the survey, search, assessment, they catch you, you cannot take anything. Are we okay? So this is again a case of unexplained expense, and the government can tax you on what rate? 60 plus 25 plus 4. Yes, everyone? Alright. Yes. 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 See, unexplained means basically you've not recorded. If you've recorded it somewhere, you've shown it in your books of accounts, then even then the government does not interfere in why you spend that. Example, today I want to buy a new laptop for my business. Can I buy the most expensive laptop? Yes. The government doesn't question it. But if I don't buy it, show it. Where have I used the money? Where have I got the money? I'm not showing that expense. So somewhere there's an indication of black money and hence they tax 105. Yes. Yeah. Yes. Yes. Expense. No, when you've paid him, when you paid Ranveer Singh such a huge amount, you've deducted TDS. Yes. And when you've deducted TDS, somewhere the government comes to know because now a lot of the payments are linked. who's made the payment, who's received the payment. They all have an annual information report. So somewhere they get to know all these high level transactions and they send you a notice. Yes. Yes. So when he's paid Ranveer Singh 10 crores, he first reported that money in the bank. How did you get that? That's a cash credit, unexplained. How did you deposit such a huge amount? Yes, guys, very, very common. A lot of my businessmen clients, guys, they say that my income is very low. And suddenly they'll give us a bank account where the transaction there's an entry of 60 lakh rupees. So can we ask them what is the 60 lakh rupees? But they can explain it. And listen, I had got a loan, I repaid it back. Next month entry again 60 lakhs. Is it explained? Yes. If you don't explain, repeat guys. If you don't explain, then 115 BP comes to pay. Are we okay with this? Alright. So this is what the 6 questions are here. We'll be writing them, everyone. Let's finish writing them. Very briefly, we'll be writing them in our books. Yes. So after exempt income, we write for both the chapters, guys. We write the question. Please write question number 1. Write the page number 15. And mark it as D because this is the first question on application of income. Earned by a lawyer is 5 lakhs. From profession has been used. Contribute to a charitable trust. Application of income. I'm writing a shortcut called ET. You know what the shortcut is now. Application is second one. Sale of business was conditional. We paid the seller's house by XYZ limit. This diversion of income be tax. XYZ limit. They will not come as independent questions, guys, in the exam. In the big question, it will be a small subpart. This question, you have to just identify whether it's diversion or whether it's application. Question number 3, guys. I'm writing R here. It is same question number. In this case, only thing was the partner was saying that after I am no more, the son will continue the partnership and a diversion of income to his spouse. Again, similar. So number 3 is same as question number. Can you just check question number 4? What is that? Okay. Number 4 is marked as D. Yes. No, husband is so husband has sold the business to XYZ. He is now out of the picture. But one of the condition of sale is that some money should be paid to the wife regularly. So XYZ will get that money. They will get a deduction, so they will not be taxed on income, and that income when it goes to the wife will be taxed on the. Question number 4. Hindu law, even one single guys, wrong, male member, a family member, can create, continue. In this case, status of each. This is very common, guys, because I'll tell you typical families in India now. The father makes an HUF. So father and mother are members of the HUF. Then the children, there's a son, there's a daughter gets married, son gets married. So now there are about generally in a family, guys, small family of India, there are two male members. And let's say the father is no more, then who's the next one? Son. Can he carry forward the HUF legacy? Yes. Because we now need only how many male members, guys? One. Yes. So this creation, the status of HUF can be retained. Question number 4, question number 5. Give me a hint, guys. Question number 5 was yes. Bearer check, yes. For section 69D. Amount paid or received. The hundi. Hundi is basically the loan, guys. Loan system. Will be considered income if other than paycheck. I think a very fundamental question of tax. Is loan ever an income? No, guys, loan is never an income. I'm taking money from you and giving it back. But this loan, because it's other than account paycheck, it will be considered as income. If it's other than yes, then double. Then double. Both will be considered. The person who's giving, for him it will also be income. The person who's receiving, it will also be income. So from the government's perspective, 25,000 and 30, whatever the remaining balance, both will be subject to 115. Yes, whoever is receiving the money. So when I'm receiving the 25,000, I will be, and when I'm paying for receiving. So from the government's perspective, 25 and 30 both will be subject to that high tax. Basically, what they're trying to put an end to is black money. All money circulated other than account paycheck. That's what they're trying to say. All right. Guys, going to the next page. I'll just wait again one. People who are writing, this is section 69D. This is question number 5. Continued, guys. Can you read the question, guys? Which amount was other than account page? 25. 25,000. And received. I bear a check. It will be considered. We have not asked, but we'll write section 115 BBE. In reality, guys, you have to save your clients from 115 BB. As a CA, your job is to save your clients, to give good explanation so that they are not subject to 115 BB. It's a very high tax rate. What is the ultimate tax rate there? 78, guys. Question number. In case. Yeah, we've not marked it. Yeah, question number 5 is D. Question number 5 is 6 is E. In case during an assessment, an amount considered as unexplained expense will not be allowed as a. And here also, guys, ultimately section 115 BB will apply. Six questions here. D, E, and R, all three are here. The last one is E. One of them was R, but otherwise was D. Now, once you finish writing, guys, I have a question to ask all of you guys. You will answer this question in the light of what we just discussed. Guys, you are a businessman having a good business. You did a business conference. What did you do? Business conference. You took all your clients, associates, etc. to Goa, and you spent 5 crore rupees on that expense. But you do not disclose that expense, guys. You do not disclose. Somewhere during the course of assessment, etc., you got caught, and you have to explain that expense, guys. Can you explain it? If you explain it, will there be any 115 BP? But if you don't explain it, then what will they apply? 115 BB, and can then you take an expenditure deduction, etc. No, guys, that is not. You're caught. After you're caught, guys, when you're riding a bike without a helmet and you're caught, after that you can't say I'll wear a helmet, don't charge me. Yes, you're caught. If you didn't want the charge, you should have known it before. Yes, so same way, if you didn't want this, you should have explained the expense before. So this is where we end the 6 questions. Yes, just storing these. Yes, yeah. Then it's not unexplained. Then it's explained. Yeah, yeah, yeah. You can have genuine reasons. Mostly it's that. So it's not always forget. It's I of course missed it, and I had the source to do that expenditure. Now a person who's showing 5 lakh rupees income, how did he have the source to put 10 crore rupees? That you cannot explain. But as a business, if I have the source of funds, can I say that business conference I missed explaining that or taking the reduction? Then you can. Yes. All right. These are questions from basic concepts. All right. So guys, this morning we've done exempt income, the 10A deduction. We did 6 sums. We'll now move ahead to another chapter. To start up a new chapter. Just 2 minutes, you can take a breather, and we'll start. For the chapter I'm starting is surprise chapter, guys. The last head of income, which is IFOS. Why am I doing IFOS first, guys? Because IFOS is similar to PGPP. So first, if you understand IFOS, it will be helpful for me to explain PGPP, which is of course the next chapter that starts. So we'll start IFOS today. I think in terms of explaining the chapter, I think the chapter will be explained today fully. The terms of writing, etc., we'll floor it over to tomorrow and sums also tomorrow. Interesting chapter. We'll also look at exam questions from IFOS once we finish that. Yes. So now the intensity of chapters will increase. But as long as you're understanding well, if you're questioning yourself well and asking the right question, I think you should be understanding all the chapters well. Yes. So 2 minutes and we'll start. And from the smaller screens, guys, we'll now move to the bigger screen here. We used to experiment for CA final morning class 7 to 10. We used to have one bench and we would keep all our phones there and enter class. And for 3 hours, no using the phone, yes. But of course, no point, no problem. I don't think you guys are so distracted of the phone anyway. So as long as I'm having no problem, I think it's all good. So we move now to the next head of income, guys. Here, one of the heads of income that we are starting today is the head of income called IFOS, income from other sources. Nothing to write as of now. Put your pen down, put your phone down, sit back, relax. Some part of it you already know, some have been amended, so we'll see that. Some additional points we'll also see, and we'll look at from a perspective that CA final from an exam perspective. How does this look? Yes. Also, we'll start predicting from each chapter something new that can be coming in the exam. So from basic concepts and exempt income is ULIP, very important, and then LIP 1st April 2023. That is very important. We'll make a list of it once we have done few chapters. Yes. All right. So this is actually not the chapter number 3. This is in our book chapter number 4, but I'm doing it slightly ahead of PGP. So here, let's start. We're starting inaugurating a chapter that we've seen before. We are going to revisit it and we're going to add to our knowledge and understanding and do case studies also from it, guys. Everyone, the chapter's name is called Income from Other Sources. No book will tell you to do this, but I'm telling you to do this. Our understanding of this has to be divided into 3 parts. I'm dividing them into 3 parts already, guys. The first part is general part. Guys. What is the first part? General. The second is dividend tax. Guys, second is what? You now know, guys, dividends are taxable and they are taxable under IFOS. So we'll see about that. And the second and the third is the most favorite of mine, which is called gift tax. And when you think about gift tax, it sounds very funny. How can be gifts be taxed? But in India, the government doesn't tax all gifts. They tax few gifts. You have a little background. We'll build on that. Yes. So we'll tackle gift tax first and then dividend tax. Finance Act 2024 did something very major on dividend tax. We'll talk about that as well. And then we'll go to the general part. Yes, everyone. Okay. Once we understand, we'll take notes. Once we take notes, guys, it's easy to revise later on. All right. Let's start with gift tax, everyone. The first part is what I'm looking at doing, which is called gift taxation. Guys, is gift taxation separate? No, guys. I've just named it separate. It's a part of IFOS only, gift tax. So first tell me, guys, do we in our everyday course of life receive gifts? Yes. If those gifts are taxable, they will be taxed under which head? IFOS. But can we also get gifts in relation to our business and profession? Example, as a CA, if I do some great work for a client, can they be happy and give a gold coin? Yes. Those gifts will be taxed under PGBP. And guys, as an employee of a company, can an employer also give you gifts? Yes, those gifts will be taxable under which head, guys? Salary. So in the exam, when you see a gift, see where it's coming from. If it's general, IFOS. If it's business and profession, PGBP. And other than that, guys, salary. And each have a different method of taxing it, guys. Today we are looking at which method, guys? IFOS. All right. So imagine, guys, it's some birthday of yours and you got some gift. So the government has a 3-step process. I'm telling you 3 steps on which gifts will be either taxed or not taxed. Yes. So let's take an example that it's your CA final clearing. You cleared it. You got a great rank and your parents have thrown a huge party for that and friends, family, relatives have been invited. Guys, what are the typical gifts they will get? Cash envelope. What else will they get? If they're really close to you, can they give you a silver coin, gold coin, etc.? Yes. Can your father say, listen, now you're a CA, I'm giving the flat to you only. Yeah. So I'm giving the apartment to you. So dramatic, but there are different gifts. But the government says, listen, I'm not interested in small gifts. You got a new t-shirt, you got shoes, you got a watch, you got a phone, you got a bike. I'm not interested. I'm only interested in those gifts. Step number 1, guys, which fall in the definition of property. Which definition? Everyone. That's the first step. That's the first filter. If it's not property, don't tax. Take it and enjoy it. Also, guys, gift taxation is always seen from the receiver's perspective. Whose perspective? Who's giving it doesn't matter. Who's receiving it, that person matters. Everyone. So let's assume all of us are receivers of gifts and we are getting gifts only in the definition of what, guys? Property. Now, what is the definition, guys? The definition is here. Miss B Sadjo is the definition. Yes. If you recollect it from inter days, great. If you don't, if you've not been my student in inter, no problem. Please learn it now. Only these Miss B Sadjo. Guys, any gift in terms of money. Money means cash. Money means a GPay. Money means a bank deposit, FD, all that is money. I is immobile property. S is security. In my Zerodha, I can actually gift shares to someone else. So there's an option you can give securities. B is bullion. Bullion basically means gold, silver, coin, not the jewelry. J is jewelry. Your necklace, your earrings, etc. Jewelry. A gold watch of Rolex, jewelry. A Patek Philippe diamonds, jewelry. Next, guys. Any artwork. What is this? A work of art. Same. Next, any drawings. Means those very expensive paintings. A is archaeological collection. Guys, never thought archaeological collection will. It came in the exam. A person gifted archaeological collection. Yes. So if you remember the shortcut, you'll not go wrong, guys. What is A for? And what is S for? Sculpture. If these are the things you're being gifted, only then you will be taxed. So I'm giving you examples. Mobile phone, no, enjoy. Yes, iPhone 16 Pro Max, 1.5 lakh, 2 lakh rupees also no tax. Bike, no tax. A Mercedes, no tax. And if they are not in the definition of property, guys, you will not be taxed. Can we repeat step number 1? Property. What is property definition, guys? Miss B, sad job. M, security, bullion, and jewelry. Keep this in mind. Others are okay. Yes, everyone. Now, guys, let's say on your exam clearing day, someone given another 500 rupees. How many rupees there is? 500. Now, the government says, listen, I don't want to tax small amounts. Step number 2, we'll discuss later. Step number 3, we go to. They say that only if the money is more than how many thousand, guys? 50,000 in the year. So, how much did you get? 500, no tax. You total up all those 500, you got 22,000. No tax. But if you total everything, it's more than 50. But, sir, how will I tell the government? But in the exam, you cannot write, no, we will not tell the government. Yes. In the exam, they say that gifts received in terms of cash more than how many thousand? 50,000. Is it taxable? Yes. Next, guys, this is money. This is what? Money. Can it be a mobile property also? Example, gold. Shares. What is gold? Mobile. What is shares? Mobile. If mobile property also is more than how many thousand, guys? 50,000 per annum. I'm giving you an example. Gold coin, 22,000. No. Gold coins, 52,000. Yes. I want more answers, guys. Yes or no? Yes. Gold coin 25,000, cash 30,000. Individually, guys, the category should be more than how many thousand, guys? 50,000. And guys, immovable property. What is this property, guys? So the shortcut is MMI. Everyone repeat the shortcut. MMI. Money, movable property, immovable property. If it's more than how many thousand, guys? 50,000 per annum, then it will be taxed. Guys, giving you an example. Mobile phone, no. Car, bike, no. Shoes, money 25,000. Money 25,000 plus 26,000. 51. How much will be taxed? 1,000. Think like the government. Yes. Guys, the moment you are stuck, think like the government and you'll get an answer. The entire amount will be taxed. Are we okay with this, guys? Yes. So this is 50-50 and this is your gift taxation. Step number 2, I'll teach you guys. But step number 2 are situations, guys. What are these? In which the government doesn't want to tax you only like you're married. Like someone is no more in your family on death, inheritance. There the government says, listen, I don't want to tax you. Are we okay with this, guys? Yes. So can we repeat the 3 steps for gift taxation? First, property. So it should be in the definition of, if it's not, no gift tax. If it's one of the situation, no gift tax. And if it's only if it's above how many thousand, 50,000 MMI. What is MMI? Money, mobile property, M. Each category should be seen separately. Are we okay? And gift tax is always seen from whose perspective? Receiver. And as a CA Finalist student, guys, you receive always 10 gifts. Section is 56 to 10. Guys. What is the section? 56 to 10. 10 for 10 gifts. Are we okay? You have to put the sections there. On day 1, I'm telling you, section and case laws give you edge in an exam. Yes, and there's a final edge you'll require. I've never ever given an exam after CFL. So this is the last lap. This is the final time you are studying actually. After that is only making money. Yes, work, make money, work, make money. This is the final lap. So make sure you're giving all out and you're going all out. Alright. So this is basically what is IFOS. Now I'm going to give you the step number 2, the situation, guys. Everyone on the screen. These are situations wherein if there is a situation like this, will you be gift taxed? Guys, there are many situations. So I have a small shortcut here, guys. Everyone, this is step number 2. These are what situations in which you will not be We will repeat. Situation under which you will not be. Example, keep in your mind, marriage. Everyone, but there's a shortcut here, guys. The shortcut is don't tax tip. Guys, can we repeat? Don't tax tip and COVID money. And COVID money received from LAHU. It's from LAHU. This is the same thing that we saw in CA Inter because guys, the section is not changed for final and inter. Same section, same applicability. Guys, are you receiving some money on death of a person? Yes. Are you receiving some money on inheritance? What is inheritance? From grandfather to father, from father to son. Guys, in these cases, there will be no gift tax. Guys, I want more repetition. D for death. I for inheritance. M for marriage. Guys, if a mom gives a gold chain to a daughter, guys, should it be taxed? No. R for relative. Can we repeat? D for I for M for R for relatives. Yes. Next, guys. You are a very deserving student. You got some scholarship from a fund. From where? Fund. From a trust. Everyone. Fund, trust, or a local authority. Guys. And it is not. Can we repeat, guys? For hospitalization, some trust paid you some money. Trust, fund, and local authority. Till here, can we repeat? D for death. I for. Are you getting some money in that cases? No tax. P for trust. F for fund. LA, local authority. R for whose relative? I'll teach you soon. Yes, M for marriage. Now, guys, HUF. Hindu, undivided family, not partition. Hindu, divided family. Guys, everyone, guys, is there a partition happening? Let's be real, guys. Most families in India, big families, are partitioned. Mukesh and Anil. So most families get partitioned. When a HUF gets partitioned, guys, P for partition. Guys, where will the assets go? To members. To whom, guys? Members. Example, let's say, guys, me and two other brothers. Three brothers are part of a HUF. The HUF gets divided. Who will get the gold? All three. More than 50,000. Guys, 1 million. More than, as the government says, if it's on PM. Can we repeat what is PM? Partition, and where are the assets going? To members. Then the government says it will not be P1 and remember, guys, HUF PM. What is PM? If it's no partition, just given to the members, tax. If it's given to outsiders, tax. So only on partition to whom, guys? Okay. Next, guys, to private trust. Which trust? I will teach you in some time what is private trust. But any private trust, if they get assets, it is not tax. 2 minutes. The new thing is COVID. It's from the last time to this time, an amendment has happened. This is not an important amendment because COVID is now down. But guys, your COVID treatment cost was 75,000. How much was the cost? You did not have the money. On friends on Facebook, etc., collected money for you, and is it more than 50,000? Yes. Still, because of which treatment? COVID, the government is paying on. Even though it's more than 50. Guys, COVID death. COVID, someone is no more. I want more participation, guys. COVID death. Someone is no more. Friends and family came together. They collected 7 lakhs and gave to the spouse of that person. Is it more than 50,000? The government says we'll not tax it. So COVID treatment, repeat, COVID and COVID what, guys? Death amount received will not be taxed, but death they put a limit of 10 lakh. Death they put a limit of. But if it's coming from your ex-employer, example, you are working with Tatas, where you're working, and after your COVID death, Tatas give you 25 lakh, that will not. So I'm giving you examples. On COVID treatment, your friends give you 85,000 rupees for treatment. No tax. Are we sure about it, guys? COVID death, friends and family contributed 7 lakh to the family. No tax. 17 lakh to the family. Tax. But 17 lakh coming from ex-employer. So the 10 lakh limit does not apply to X. Are we okay with this, guys? Can we recap all the words with the shortcut? These are situations under which if you get any property, it will not be taxed. Example, on your marriage day, guys, will people gift you? Yes, all those gifts are not taxed. I'm giving an example. On the occasion of marriage from non-relatives. On the occasion of birthday from relatives. I'll tell you how to think about it, like Lakshman Rekha. Even one is touched, no tax. Now think about it again. On the occasion of marriage by non-relatives. Because which marriage? On the occasion of birthday by relatives. No tax. Because any one you touch, guys, it's not. So the way you think about is Lakshman Rekha. Any one you touch. Can we repeat? Situations under which there is no tax. E for death. I for inheritance. Money received from a trust, fund, or a local authority. HUF. On partition, amount received by the members, amount received from relatives, amount received from marriage, COVID treatment and COVID. But guys, for COVID, you have to keep all the proof. Yes, that means your positive report, the hospital bills, all that you have to keep. Then only you get it. Okay, all this non-taxable. Now, what is private trust? Guys, private trust basically means you're a very rich person. Yes, let's say you're Narayan Murthy. Who are you? And you say, after my death, who will take care of my family? So you transfer all your assets to a private trust. Which trust is this? Whose family's private trust is this? Murthy family. Now the government says, listen, private trust, when you get land, gold, shares, etc., more than how many thousand, we will not tax you because you're one and the same. Narayan Murthy and his private trust are one and the same. This private trust, when they get the money, will not be taxed. Not important. It's mainly important a marriage, relatives, guys. Keep those in mind. Everyone. So now I'm giving you some examples. You tell me, will it be taxed? On your CA final clearing day, you got cash receipts 52,000 from your grandfather. Not taxed. Are we getting the point, guys? So step number 2 will filter it out. Everyone question. All right. We move ahead now. The relative definition I'll teach you in some time. Guys, these are called gifts. What are these called? Gifts. I have some more time to discuss one more concept. Let's discuss the next concept. Everyone. Guys, before that concept, I want you to tell me what is black money. Undisclosed, on which you have not paid tax. So you should be paying what on that, guys? Tax. So now this is a concept of black money. I'll teach you this black money concept and then we'll see how it is taxed under IFOS. Let's take a very absurd example. You gone to a jewelry shop and you bought jewelry worth 10 lakh rupees. How much worth? So you've gone to the jewelry shop, you've selected 10 lakh worth of jewelry and he is giving it to you, that jewelry for you only for 3 lakh rupees. Possible? Yes, guys. 1 minute. 10 lakh jewelry for how many lakh? So you made a bill for how many lakh? 3 lakh. You swipe your card for how many lakh? 3 lakh. But it's not possible because why will someone give such a huge discount? The government knows that what you've done, that 7 lakh rupees has been paid in, and that's a black money transaction. They're targeting that. Another example. You went to buy a property, prestige builder, 1 crore apartment. How much is the apartment for? You bargained. He said, only for you, I'll give the apartment for 30 lakh. Possible? You made a check of how much? 30 lakh. But in bag, you put how many lakh? So the government says that these kind of transactions I want to target. So this is what we're targeting. It's very important. You've done this at CA income. We're just adding it. Guys, every time you get some property, every time you get what? Property at a lower valuation. This is called basically called. Are you paying something? Yes, but it's inadequate. What is it, guys? Inadequate. Example, for a 10 lakh jewelry, how much did you pay? 3 lakh. For a 1 crore flat, how much did you pay? 30 lakh. So are you paying something? Yes, but it is inadequate. Repeat, guys. What is it? So the government says, listen, these inadequate payments we are going to now target, and this black money, everyone on the screen only. This is you, or this is Mr. A, who's buying jewelry, guys. How much is the jewelry for? 10 lakh. How much is the jewelry for, guys? 10 lakh, but you're getting it only for how many lakh, guys? Everyone, who's the receiver here? Mr. A. Let's talk to Mr. A. Mr. A, how much did you buy the jewelry for? When the fair market value is how many lakh? So, Mr. A, I know that you've got a benefit, guys, of how many lakh? 7 lakh. The government says, listen, yeah, this benefit, if it's more than how many thousand, up to 50,000 will not question. Like, to how many thousand? Because, guys, see, sometimes you bargain, right? If the bargain is too much, if the bargain is more than how many thousand, right? 50,000, then it will be tax. I want more participation, a little more understanding. I'll give you a shortcut called IB. What is the shortcut? Guys, is it inadequate payment? Guys, why is it inadequate? For 10 lakh you paid? Yeah. Guys, for 10 lakh I paid 9 lakh 90. It's still a benefit of how many thousand? 10,000, but we'll not tax it. Up to how much amount, guys? 50,000. But the moment the benefit is more than how many thousand? 50,000, it will be taxed. So who's the receiver? A. We're talking to the receiver. If you have any IB, inadequate, which leads to a benefit, that benefit, if it's more than how many thousand, will be taxed. Not in a t-shirt, not in shoes. Amazon sale 1000 rupee t-shirt for 300 rupees. Is it a benefit? Yes, but it will not be taxed. Only benefits which are in the nature of what? So now let's conclude this, guys. Who is the receiver here? A. What did he receive? Jewelry. Worth how many lakh? 10 lakh. For how many lakh? Is there an IB? What is the benefit? 7 lakh. Is it more than 50,000? So this benefit will be taxed under which head of income? Therefore, same section 56. As you bought a 10 lakh rupee car for 3 lakh. You bought a 1 lakh iPhone for 30,000. No. As they will only tax it. This is the definition of what is property. Are we clear? Everyone, everyone, everyone. As we cannot move ahead till you remember IB. Inadequate leads to what, guys? Benefit. Once again, inadequate leads to, and whose perspective of CI? The CEO. Everyone. Go to the next and the last example before we take a break, but important, guys, to see this well. Who is this person? Everyone, all eyes on the price, please. Everyone, this is A, and this is a builder called which builder, guys? Let's have a look. Guys, you've discussed that you want to buy an apartment which is for how many crore? 1 crore. This is the stamp duty value. Which value is it, guys? Stamp duty value. And he's selling it to you only for how many lakh, guys? 30 lakh. Guys, again, please tell me, is there IB? What is IB? Inadequate leads to a benefit. And what is the benefit you're getting, guys? 70 lakh. The government says, listen, the benefit is more than, guys, I want more repetition people. The benefit is more than, but sir, I'm buying an immovable property. In immovable property, will I not have a benefit of at least 50,000? Guys, when you buy vegetable, 100 rupee vegetable, you say, no, I'll not pay you more than 70. Same way, when you buy an apartment, guys, will you not bargain? The government says, okay, so one is 50,000. One is what? Second is 10% of whatever you are paying. 10% of how much are you paying? 30 lakh, not 1 crore. How much are you paying? 10% of that is how much, guys? 3 lakh, which is higher. Up to that much benefit you. Guys, please tell me, other than property, 50,000. But if it's property, 50,000 or 10% of what you're paying. I'm changing the number, guys. This is 40 lakh you're paying. 4 lakh. This is 60 lakh you're paying. This is 70 lakh you're paying. So, guys, whatever you're paying, 10% of that, up to that much amount benefit possible. Now tell me, guys, A is 50,000. B is 10% of what you're paying. That is how many lakhs here? 3 lakh, which is higher. The government says you can get a benefit up to 3 lakh. But, guys, now please tell me how much is your benefit? 70. Is it more than 3 lakh? So, you will be taxed under which head? IFOS section which? 56 to 10. Be okay with this, everyone, everyone. You bought a land of 1 crore for 20 lakh. What is the benefit? I'll tell you a shortcut. Simply take the benefit and take 10%. Compare. If it's higher, fully tax. Everyone, fully. For others, you will only see 50,000. Here, you will take 10%. You bought a land on the outskirts of Bangalore. There is 1 crore land for 65 lakh. Benefit 35 lakh. 65 lakh, 10%. 6.5. Is it more? Fully taxed. Are we okay with it? Yes, yes. So please tell me, dividing the class for other gifts as IB, inadequate leads to, the benefit should be up to 50,000. For property, 50,000 or 10% of sale consideration, whichever is. Are we okay? If you cross that limit, then you. Guys, I have bought jewelry for 10 lakh worth for, which is worth 10 lakh for 9 lakh 80,000. Is there a benefit? Yes. What is the benefit? 20,000. There will not be. Guys, I bought a prestige property of 1 crore, but I paid 1.1 crore. Guys, more than that is not a problem because great views, guys. I had a very good, nice golf course view. Can I pay more? Yes. Two people wanted to buy the same property. I paid 10 lakhs more. Guys, paying more is not a problem. Guys, paying less. Guys, same like your marks. More, not a problem. Less, problem. Same here, guys. If you pay less, that means you're paying cash. Are we okay? Everyone. Now, guys, everyone understand this very important concept. The last concept. Guys, how do you buy a property? You first go, you check out the property. Do you like the property? Immediately do you pay? No. What do you pay? Token. What do you pay, guys? And after a few months, do you finalize and register? Yes. Now you tell me, guys, everyone at CA final level, this is something that is expected out of you. The day of token and the day of registration, can they be two different days? Yes. Let's put two different dates, guys. Today is 6th February. You went and paid the token. And 6th May, you finalize the property and you did the registration. Are they two different days? Yes. Guys, what if there are two stamp duty? On today's date, the stamp duty value is 60 lakh. How much? On 4th of May, guys, the stamp duty value becomes 1 crore. How many crore? 1 crore. The government says you cannot do this calculation with two stamp duty. My shortcut. You only live with how many stamp duty values? Repeat, you can only have how many stamp duty values? But the problem is now I have how many? Two. 60 also, 1 crore also. Guys, which one is lower? 60. So I want to take which one is lower. But the government has put a condition that if you paid lower, guys, repeat, if you paid, no, sorry, if you've taken the lower amount, let's put it on paper, guys, here. Everyone, please tell me the two dates. One is 6th Feb and one is 6th May. This is date of agreement. This is date of registration. What is the stamp duty value here? 60 lakhs. What is the stamp duty value here? What if this was also 60 lakhs? There's no problem. The problem is when there are two values, guys. Can you have two values? No. So you have to have only. How do you choose one, guys? Whichever is lower, guys. Whichever is lower. Now I want to choose this value. The government says I'll give you this value, but subject to a condition. To take this value, no condition. Guys, what if 60 became 58? Which value will you take? 58, no condition. Date of registration, no condition. But if it's the earlier date, then there is what condition? Everyone changing this. This is how many crore? This is how many lakh? 60. Everyone. Which one will you want to take? Lower. But there's one condition. Are you paying some token or not? Prove it to us that the token has been paid other than cash. Guys, whom did you pay the token to? Prestige builder. Guys, whom did you pay it to? Show it to us, and how did you pay? GPay? Okay. Bank account? Okay. Credit card? Okay. Cash? Not okay. Bearer check? Not okay. Cross check? CBC? Not okay. Cash? Bearer check? Cross check? Are we okay with this, guys? Yes, yes, yes. So two shortcuts. How many stamp duty values can you will live with? One. What if there are three stamp duty values? Only one. And you'll choose whichever is lower. But the condition is on that day, guys. You should have made the payment other than. I'll tell you now the logic of this. At CA Finalist, you should also understand the logic. How much did you buy the property for? 1 crore. Everyone, how much did you buy the property for? But you paid only how many lakh? 30 lakh, 40 lakh, 50 lakh. Guys, did you pay low? So there's a chance that you will be taxed. So what you do is, guys, today you go back many months back and see when the stamp duty value was lower. I repeat, everyone. Wait 2 minutes. I'm very confident in understanding. Guys, today you're buying a property for how many crore? But you're paying only how many lakh? 50 lakh. Guys, so what you do is, today you register the property. But you go back many, many months back when the stamp duty value was 32. When the stamp duty value is only, so you find that 1.5 years back, the stamp duty value was only 32. So guys, you quickly make a fake agreement. You sign, builder sign. And then which value will you take? 32 lakh. And 32 lakh and 30 lakh, what is the gap? 2 lakh, you'll not be taxed. But the government says, okay, understood, everything is okay. But we know that you might make an agreement which is backdated. That's why prove to us that that day you have paid some money to him other than cash. That day or before that day. And that you can't prove. Yes, so the government with one stroke cleared all this fake agreement. Everyone okay with this? So guys, recapping, dividing the entire class. Free gifts. Gifts for inadequate consideration. First free gift. Step number 1. It should be in the nature of property. Step number 2. Situations in which there is no tax. Can you give me 3 situations? Marriage, death, inheritance. And step number 3, MMI. Money more than 50. Mobile more than 50. Immobile more than 50. Guys, you have to aggregate money all the whole year, hold the money, all the mobile property whole year. And guys, step number 2 are those situations which will not be taxed. Guys, section 56 to 10, it is always in whose hands? Receiver. Here. Are you buying a property? Are you buying jewelry free? You are paying something, but it is inadequate. IB. Inadequate leads to benefit. Guys, let's see the benefit. 10 lakh jewelry for 3 lakh. 7 lakh. If the benefit more than 50,000, yes, tax. Simple. Guys, take the benefit, see more than 50,000. Only in property, see 50,000 or 10% of sale consider. Are we okay? And guys, can we live with 3 stamp duty values? 2 stamp duty values? 1 stamp duty value? Yes. So what if they give us 2? Choose one, whichever is lower. And the lower happens to be date of agreement. Prove that that day or before that day you have paid some token by modes other than CBC. No cash, no bearer check, no. But sir, I have paid cash. Then we can't take that stamp duty. We have to take today's stamp. Are we okay with this, guys? We'll write about it and we'll do some questions also on it. So this concept gets stronger. Guys, this concept will not come in theory. It will go in practical question. You're buying a property. Yes. Guys, I'll now tell you reality how we do property. Just asking you a question. And of course, I'm being recorded, but it's still reality, so you should be a part of it. Guys, when you buy property, do people use black? I'll tell you how they use black. You go to Prestige Builder. You say, I really like this apartment. He says 1 crore. But you say, sir, I have some black money in my to use it. They say, okay, use it, but only up to 10% of sale consideration. So, guys, what they do is reverse calculation. I'll give you a situation. Guys. You make an agreement for 95 lakh. How many lakh? 10% of 95 lakh. Up to 9.5 lakh you can pay in cash. So, guys, do people pay in cash? Yes, but they're smart enough not to pay more than 10% of sale consideration. Guys, what if you're buying the property for 80 lakh? Up to 8 lakh, that difference should be there. So, guys, are you using cash? Yes, but you're not using a lot of cash. Are we okay with this, guys? Yes, in reality. And who suggests all this calculation? See, the CA will do all this calculation and tell you that this is the cash that is allowed. Beyond that, you will be okay. But from an exam perspective, IB, inadequate leads to benefit. First, check the benefit. 10 lakh, 1 crore property for 30 lakh. What is the benefit? 70 lakh. Is it more than 10% of sale consideration? Sorry, it will be that. Are we okay with this? But 1 crore property bought for 95 lakhs. I want the benefit. 5 lakh. I want the benefit. What is the benefit? 5 lakh. But how much are you paying? Is it 10% of sale consideration within that? No problem at all. Your property is yours, no tax. Are we clear with this? Yes. And we can only live with how many stamp duty values? Yes, all right. Perfect. Maybe this percentage has changed from your CA entered days to now, guys. Maybe it was 20% earlier. Now it has become how much percent, guys? 10%. Are we okay with this? Yes. So this is the first part, gift taxation. Once we come back from the break, we'll do dividend taxation, and then general is very simple. Yes. Right now it's been about exactly 2 hours in class. 15 minutes break for everyone. Yes. It's 8:40 right now. I'll see you guys back. All right. That break seemed really small and short, but we are back, and we are looking at a very small session now. Moving ahead. Uh, Guys, I'm going over these concepts slightly quicker because these concepts are something that you know. Even if you don't recollect it well, you know these concepts. So we are going to revise these concepts first. Of course, when you write it, it gets better. And the best is when you start doing the sums on these chapters and these concepts. Yes. So just before the break, let's recap what we were up to, guys. We were up to a chapter which is called IFOS. And in IFOS, yeah, someone will have to help me with this, please. Thank you. No, I'll tell these guys next time to just start it before. But right now, guys, we are looking at gift tax. I want to ask everyone, including her, you also can start and just listen and tell me what the answer could be. Yes. Guys, I bought a 1 crore apartment for how many lakh? 30 lakh. I bought 10 lakh jewelry for how many lakh? 3 lakh. But what if I am not someone who is Mr. A? I am a jeweler only and I buy 10 lakh rupees jewelry for 3 lakh. Then, guys, will I be taxed? Yes. But not in IFOs. I'll be taxed under PG because for a jeweler, guys, jewelry is stock. It's a business part. So I'm a builder. I bought a 1 crore apartment for 30 lakh. Am I getting a benefit? Yes, but I'll be taxed under which head, guys? PGP. Are we okay with this, guys? Yes. All right. So things that you had to keep in mind. Gift tax is almost coming to an end, except this one definition of it. So we'll discuss the definition of relative and then we'll move ahead to dividend tax. Today we'll do gift and dividend tax. Tomorrow we'll do the general part and the sums and the writing. So what time is usually end of day at articleship? What time do you all end? Work ends approximately 7 o'clock, 8 o'clock. What? 8 o'clock. Okay. And what is the latest you've been in office? Morning. Next day morning. Oh, crazy. 2, 2:30. That's the last you've been. You never stayed over at the firm. No. Stayed over. Stayed over. Came back. Yeah. Yeah. And unfortunately, 30th September is my birthday, and that used to be the due date for most of the time. And I used to almost like celebrate it there only, and it was crazy. But anyway, what I want to understand is if there is some writing to be done. Example, this gift tax part. If you have to write it, can we write it at home? Yes, we'll try and see so that we save some class time. Yes, we'll see if we can afford to do that. But right now, guys, on the screen is a definition of relative. You tell me, guys, who are your relatives? In true sense, who are your relatives? Parents. Okay, parents. Who else? Siblings. Let's. Who else? Spouse. Yes. Okay. Wife, sister, straight guys. His priorities are very different in life. Yes. I feel bad for her already. He's more interested in someone else. Yes. Of course, your children also, whenever you have them. Yes. And who else, guys? Your cousins, your close friend. Are there? So, guys, the definition of relative is very simple. In the Income Tax Act, there are two definitions of relative. Guys, let's see the definition of relative. The first one is pretty simple, and I call it the clock. I call it what, guys? Clock. Guys, in the middle is you. Here is your spouse, guys. Who is it? Spouse. No spouse is sister and all, guys. Only spouse. On this end are your siblings, guys. Who are these? Siblings. Siblings basically means your brother, your sister, but real siblings, yes. Next, guys, who are these here? Children. And who is here, guys? Parents. And I call this as a clock. Right? Your spouse, your siblings. Below, children. Above, parents. Just extend this clock. So this is the clock. This is what I mean by the clock. Just extend the hands of the clock. Parents and grandparents, children and grandchildren. Are we okay with this, guys? So this is the definition of relatives. Throughout the DT, we will use this definition of relatives. When I say general definition, this is what it is. But guys, in gift tax, the government said, and that's a great thing. Think like the government, it's a good thing. The government has expanded the definition of relative. So that means, guys, can you get gifts from a lot more people? And those gifts will not be tax. So it's a wider definition and it's a bigger definition. Don't go anti-government. Think like the government. Is a bigger definition better? Yes, because more people can give you gifts which will not be taxed. So what is the definition of relatives here, guys? Everyone, here it is. This is Mr. A. Who are his relatives, guys? First, guys, your spouse. Guys, who is this? Spouse. Alright. So I'm just putting spouse and I'm putting one dash there. So spouse. Next, guys. I'm putting this also here. Guys, what about your siblings? Yes. So this is whom? Siblings. Everyone. I want more. Brother and sister. Spouses, brother and sister. So can we repeat, guys? How many siblings? Two. So your siblings and your spouse's siblings. These are whose relatives, guys? Yeah, Mr. A. We are calling this Mr. A and whose relatives. So let's start again, guys. First, spouse. Next, sibling. Not just your siblings. Spouse's siblings. So what he mentioned here, sister, wife's sister, even those. And guys, even your parents' siblings. Even your parents. So how many siblings? So I'm writing siblings and I'm putting three. So spouse, one. How many siblings? Your siblings, spouse's sibling, and your parents' sibling. Guys, literally saying my sister. Is she my relative? Yes. My brother. My spouse's sister. My spouse's brother. Yes. My parents' brother and sister. The mama. Yes. Or what we call bua or like that. Those are also my relatives. Are we okay? So how many siblings here? Three. Alright. Next, guys. Guys, people above you. Who are above you? Parents. Who else above you? Parents. So parents, grandparents, etc. Whoever is there, they call it lineal ascendants. What do they call it? What is this word lineal? Lineal basically means paternal. So your parents, no problem. Above parents, grandparents, Nana Nani, Dada Dadi, yes. I have not defined it right. Nirmala.Sitaraman @gov.in. You can ask her. But I have not defined, I'm just explaining it. Everyone. So what is LA? Lineal ascendants. Who's below you, guys? Children, guys, everyone. This is children, this is grandchildren, and whoever. Can we repeat? Guys, first, spouse. How many siblings? Your siblings, spouse's sibling, and your parents' siblings. Then, guys, lineal ascendants. People above you, but above that, not Nana, paternal, paternal. Yes. Children, grandchildren, no problem, guys. They are called descendants. What are they called, guys? Descendants. But not just your lineal ascendant, even your spouse. Even your spouse. Everyone. Your spouse's parents. Your spouse's. They are also your relatives. 1 minute, guys. Your spouse's parents, your mother-in-law, father-in-law, also your relatives. But only for which case? Gift tax. Only for which case, guys? Gift tax. And obviously, guys, spouse's children will also be your children. So technical, no. I hope there is no confusion there, guys. Yes. Just hoping. So, and guys, whoever you see here, let's recap. Guys, spouse. How many dash should I put here? One. Yes. Siblings. Three. Your siblings, spouse's siblings, and your parent. What about your spouse's parents' siblings? No. Only three. And guys, LA. What is LA? Linear ascendants and descendants. How many? Two. No, descendants is not linear. Only linear ascendants. How many? Why two? Yours also and spouses also. Are we okay? And now, guys, whoever you see in this, they are better half. Example, my sister. Is she my relative? 1 minute. My sister, is she my relative? My sister's husband also. My children, are they my relative? Yes, my children's spouses also. Anyone you see in this list, they're plus one. Guys, that's why spouses, and that's why the shortcut is 232. Can we repeat the shortcut, guys? 232. Two spouse, three siblings, and two LAs and descendants. Can we repeat this, guys? This definition is only for what purpose? Gift. So many people can give you gifts and there is no. Now, guys, think about you and you tell me, guys, first your spouse. Will there be any relative affiliation? Yes. How many siblings? Your brother, sister? Spouse's brother and sister? Parents, brother and sister? Grandparents, brother and sister? No. Children's brother and sisters? Of course, your children only. Yes, all right. Technically, yes. Next, guys, LA, lineal ascendants above you and descendants. Same with for spouse also. So, two LAs and LDs. And anyone you see, they're better half. Are we okay? Now, I'm giving you some examples. You tell me, are they in the definition of relatives? Your cousin brother? No. All right. Your sister's husband? Yes. Your children? Your dad's brother? Your dad's brother's wife? Yes. And so what you do is just see this family tree in the exam. If the gift is coming from them, it will not be. Are we okay? The shortcut is 2, 3, 2. Can we repeat? 2 spouse, 3 siblings, and 2 ascendants and descendants. But only thing is ascendants only will be. Are we okay? Yes. Yeah. Step legally adopted. Okay. No problem. Then no. Because otherwise, for avoiding gift tax, you can always say that listen, he is also step brother, step. So legally adopted. So I'm saying stepson, also step cousin, like as in step brother. So that means let's say your parents have adopted someone. Is your brother and sister? Yes, it's legally adopted. So anything which is legally adopted is perfectly okay, whether it's your brother, sister, or whether it's your children. Hmm. Legal, like Islamic law, Muslim law allowed. So yes, both can gift you and no gift tax. Yes, yeah. Always nice. Very ambitious there, sisters, wife, sister, and your guys, two of them already. Yes. All right. We always very ambitious start. Yes. All right. He's congratulating him also. Before marriage, two guys are. Yes. Good. Yes. All right. So this is what it is. Of course, legal, even two spouses, guys, the gifts will be not be taxed, gift tax. So which is a bigger definition, gift tax or others? Gift tax. Yes, everyone okay with this? So we'll be writing this also. And this completes our gift tax provisions complete. Let's recap everyone. Gift tax is always seen from whose perspective? There's only one section 56 to 10. Gifts can be free also. Step 1, step 2, step 3, more than how many thousand? 50. But if gift is not free, inadequate consideration IB. Inadequate leads to benefit. Where the benefit is more than 50,000. Only in case of property, it's 10% of sale consideration. And can you have two stamp duty? Yes. Can you have three? But you have to choose only one. Which one will you choose? Lower. A student asked me a question, sir, what if lower one is today's value? Then no condition. It's today's value. No, you're going for the agreement. There is proof. Only if there is older value you're taking, then we need to give them proof. The amount had to be paid other than CBC. No cash, no cross check, no beverage. Are we okay with it? Guys, now we come to the next stage, which is called dividend tax. Yes. I don't have too much time. It's right now 9:10. We have the next 10-15 minutes to discuss this dividend tax. So let's try and see if you understand it. I think because of your background at CA, I think it should go well and it should go easy. Guys, let's talk about dividend and you tell me, guys, how do you earn dividend? Forget tax amount. How do you earn dividend? You buy shares of company. Listed also, unlisted also. You buy shares of any company and the company pays you what? Dividend. Do you spend anything on that? Nothing, like you wake up one morning, Reliance has declared what? Dividend. Next morning you wake up and DMart has declared what? Dividend. So dividend is very simple. And guys, dividend always and always goes under IFOS. Everyone that's shortcut. Dividend is taxable under what? For you also, for me also, for Rakesh Junjunwala also, any investor also, guys, dividend will always go under which head? IFOS. Is that clear, guys? Yes. But I am not happy with the concept of dividend because who has already paid tax? His companies already paid tax, and then I'm getting it. I'm paying tax again, so I'm not happy. But we have to live with it, guys. The dividends are everyone okay with. Now I'm just putting the points across. Dividends are taxable under which head? IFOS. It can come from a domestic company also. It can come from a foreign company also. Right now, as we sit right now, guys, I have some shares of a foreign company also. If they pay me dividend, also it's taxable. Indian companies also taxable. Everyone clear, clear, clear. Nothing new here. This is something that you already know. Now, something that is slightly challenging, but again, you have some background, some amendment also has happened. Is who is this company and who are these shareholders and do they want the money? Yes, but if we call it dividend, if we call it what? The shareholders will be taxed and the shareholders don't want to be taxed. So they have approached you that can you help me remove money from this company? Repeat guys, can you help me remove money from and pay to whom? Without calling it dividend. Right. So let's assume guys a number. The company has 222 lakhs of profit. How much profit do they have? 222 lakhs. Who has the money right now? On which they've already paid tax. Now, if it remains with the company, no problem. If this 222 remains with whom, no problem. But if it goes to whom, who's watching you like a CCTV camera? They say the moment this money reaches the shareholders, and we'll call it one. So, guys, as a CA, can you help your client to remove money and give it to the shareholder without calling it? Guys, here we are. The first way, yes, the company is not giving dividend, but they are giving some asset. They are giving what? Example, they give out gold coins. What do they give? To whom? Shareholders. And let's say below 50,000 guys, because otherwise there'll be gift tax. Yes, everyone repeat. What is the company giving? Assets. Example, gold coin to whom? Shareholders, guys. This is removing money without calling. Don't lose the span, attention span. All okay there? Yes. Yes. If you call it dividend, it will be tax. So what are you trying to do is removing money without calling it dividend. I'm removing money by calling it what, guys? Yes. The government says, what are you doing? I'm watching you. You are removing the money, but you're not calling it what? If you don't call it dividend, I'll call this deemed dividend and I will still okay. Guys, the logic is only one. Who has the money? Company gives the money, no problem. But the moment money goes to whom, we will have to call it what? Dividend. If you don't call it dividend, the government will call it deemed dividend. Yes. So what is A for? Asset. This plan has failed because who's taxing you? Government. Same guys. Who will be taxed? Shareholders. But we'll not call it dividend. We'll call it deemed dividend. But is it still taxable? Dividend or deemed dividend? Both are. Offline lecture, online lecture, both are lectures. Everyone okay with this? Yes. All right. Next, we go to the next one. Is who has the money? Who wants the money? Without calling it what? So they did a brilliant plan. They called all the shareholders to their office. Hear me out, guys. CA final students should not have a problem. But if it's a problem, you're not paying enough attention. So give all that you have attention. Now the company calls all the shareholders to their office and they say, listen here, we are giving you free. What is the word? Free. We are giving you free debentures. What are we giving you? Free debentures. Or we are giving you free, or we are giving you free preferential bonds, debentures, or preferential. Shareholders are like, what? I wanted money. I don't want bonds. Just take these bonds today. These bonds have a validity of 3 months. How many months? After 3 months, you will get. Can you define what is a bond? It's a piece of paper against which you will get money. What is preferential? Same. What is debenture? Same. So today, what have you given them? As debentures, bonds, preferential. Have they paid anything? No. They are free. But on the price of it, guys, whatever is written, will you pay them eventually? So money will eventually go from there to the share without calling it. Someone says, what are you trying to do? Ultimately, what is going on? So we'll call it what? Deemed dividend and we'll tax it in the hands of whom? I'm telling you guys, all these plans will fail because ultimately the government says you either call it or we'll call it deemed dividend. But in any ways, we will tax it. It's a third plan. Who is this? Oh, by the way, what if I give free equity shares? Guys, there is no problem. There is no deemed because against equity shares, guys, will the company have to pay money? Guys, I have Kingfisher Airlines equity shares. Is the company paying me money? No. Everyone. So it is only deemed dividend as a concept only if they are issuing debentures, bonds, preferential. I'll repeat it. A company has closed down. I have equity shares of it. Will the company pay me money? If the company pays money only against debentures, bonds, preferential. I'm not convinced. I'm going back to basics. Please tell me what is an equity share? It's a piece of paper. Can I sell it? But can I force the company to pay me back the money? No, guys, no, nothing like that happens. But debenture, if it's a 3 month debenture, after 3 months, you have to get the money. So that's why equity shares there is no deemed dividend. But preference shares, bonds, debentures, if they are issued, there is a concept of deemed dividend. Everyone okay? Yes. Point number C. Who has the money? Who wants the money? Now, guys, the company shuts itself down, closes. Guys, what do? Close. They go under liquidation. What is the technical word they go under? When a liquidation happens, assuming they have no loans, guys, where will all the money go? So, guys, if you close the company, guys, if you close the company and you give away what? Assets to whom? Shareholders. Money has gone from where? The shareholders without calling it. But, sir, company is closed, no? Yes, but tomorrow I can start a new company. Guys, these are only ways to avoid. The government says, even if you close the company, then it will be considered as one. I was just telling you one simple concept. If you're getting confused here, remember, guys, who has the money? You give the money to shareholders but pay tax. If you're trying to avoid it, we'll call it deemed dividend. And last point in deemed dividend, guys, this point number D. Who is this? Company. Who are these? Who has the money? Who wants the money? Without calling it, is a share face value is 100 rupees. How much is the share? I have one more responses. How much is the share face value? 100. They reduce that price and they make it 10. Guys, they reduce the share capital. 100 rupees becomes. What is the difference? I'll give you 90 rupees cash. Is 1 minute. You have an Amazon voucher of 1000 rupees. How much? Amazon is making it 100 rupees and paying you 900 cash. Are you okay? Yes. Same way, guys. The government makes the 100 rupees share as what? 10 and pays what to the shareholders? Is the money going from company to whom? Without calling it what? This is also called deemed dividend. This is decrease in share capital. What is it called? Decrease in. Guys, if you're not understanding decrease in share capital, understand this, guys. You have a Flipkart voucher worth 1000 rupees. How much? You can buy anything from Flipkart worth up to. Flipkart reduces to 100 rupees. Are you upset? Yes. But they pay you 900. Now are you upset? Same way, I reduce the share capital from 100 to what? 10. But I paid you what? Indirectly, guys, I'm giving you money without calling it dividend. Guys, even if you don't call it dividend, we'll call it deemed dividend. The section is 222. The section 222A is when you're declaring assets. B is bond. C is close. D is decrease in share capital. Into A, B, C, D. Doesn't matter. Money has gone from whom to whom without calling it. So the government says this is deemed dividend. And will the shareholders pay tax? Yes. The next one, which is E and F, guys. F is the amendment one, which we will do tomorrow, not today. And the general part, not today. Yes. So I don't want to push the lecture beyond time. Okay. I'll just recap this, guys. Please tell me, dividend, is it taxable or not? Yes. DTI, dividend is always taxable under. I'm a stock market expert. I want my dividend to go under PGB. No, it cannot go. As a rule, it will always go under where? It's like a lottery, guys. Lottery will always go where? IFOS. You cannot say I'm a lottery dealer. A lottery will go on PGB. No. It will always go under IFOS. It's a rule. Foreign company also, domestic company. So in the exam, if you see dividend, open which room? IFOS and put it there. But guys, sometimes they will confuse you with deemed dividend. Who has the money? The government says if the company has the money, no problem. But if it goes to whom? We want to call it dividend. If you don't call it dividend, dividend. Guys, in A, what was going on? In B, bonds, debentures, preference shares. In C, closer. Technical word, liquidation. And D, decrease in share capital. In all these cases, money has gone from the company to the shareholder. So it is deemed dividend. Okay. More on this deemed dividend concept tomorrow, not today. But today, what I will do is I will share during the day, guys, some handwritten notes with you guys. Please do me one favor. The last chapter you've written is which one? Exempt income. In that video only, I'll tell you how many pages to leave for the sums. I think there are very few sums there. And then you will start writing the IFOS notes like I shared. So what happens, it saves our 40 minutes or half an hour tomorrow session. We can do more detailed discussion and more sums tomorrow. Alright. So this is where our conceptual concepts end. And now we come to which part of the day? Case laws. Yes. So we do case law. At least we'll write those 3 case laws that we have to do for the day. Yes, everyone. Let's try and recap. This is the first day. or forget which day, guys. There was a concept of Honda. Yeah. Were they paying some technical fees? Second, Russia cement. Did they get some liquidated damages? Yes. Capital receipt. Then there was Mahle Anand filter, where some deposit had to be filtered, had to be given up. So even that we saw. Then, guys, yesterday we saw something called ICDS, ID. Right? Did they have asset? Were they using the asset? Can they take depreciation? Yes. Even though registration is not done, still they can take it. Next, guys, we've written, yes, Chennai properties. Guys, Chennai properties, guys, that case law now has changed. Chennai property says property means rental income. My rental income usually goes under first property. But if I used to run it as a business, in Bangalore, so many people rent income business that is under PGBP. But now the Finance Act 2024 has said that if it's rental income, it will always go under which head, guys? IFOS. Are we okay? Very, very important from your example. And guys, the next one which you did was which one? A and Co. Which bank? Hotel Bank. Guys, they have put some money in relation to a business in the bank, so that income was also related to. Alright. We'll do now three for today. Let's see which three we can do first. Very simple one, guys. Since we're doing an IFOS, we'll do three case laws from IFOS. Everyone, all attention on here. There is a person called Manju. What is the person called? Now, this guy got really lucky. He won a lottery. He won a. Guys, lottery income will generally go high. But he's seeing different. He's saying put it in PGB. And we asked Manju, why PGB? He said, because I'm a lottery business. I deal in lottery tickets. I sell lottery tickets. They said, listen, selling lottery will go under PGBP, but you won a lottery will always go under goods. So Manju and company, guys, this argument was that if it's casual income, if it's which head of income should it go? IFOS or PGBP? Where should it go, guys? Always IFOS. Even if you're a dealer on lottery tickets, that dealing business will go under PGBP. But if you win the lottery by chance, then it will go under which head, guys? IFOS. Are we okay with this one, guys? Everyone. Next one. The next one is slightly different, guys. There's a company called Sri Rama Multitech. What is a company called Sri Rama? First, I'll explain the situation and then I'll tell you what the case was. You can also decide. Guys, do you know IPO? Yes, initial public offering. The company is issuing shares. Guys, let's say Sri Rama Multitech is issuing shares to all of us, and all of us apply. What do we pay? Application money. Guys, their money goes to who? Company. For a while, they keep the money. They see how many applications are received. Guys, let's say that period of application money being received is about 10 days. So Sri Rama Multitech received which money, guys? Application money, which remained with them for how many days? And they put that money in a bank and they earn interest of 1 crore. How much interest did they earn? Like 1 crore. Now, guys, Sri Rama Multitech told the government, my IPO expenses were 10 crore. IPO expenses were how much? Can I minus this 1 crore and say my net expenses were 9? That was the argument. What they said is this money is not some of my saving. It is which money? Share application money, which I put where? Bank. And I earned the interest of my share issue expenses were how many crore? IPO expenses 10 crore. So can I say net expenses were 9 crore? Yes. Usually 1 crore should go where, guys? But guys, I told you already, this is not your saving. It is part of the IPO process you got to say. So it will go under which head? Are we okay with this thing? And the next case law will I only be able to do two today because the next is related to deemed income section which I have not taught. So let's write these two case laws, guys. Everyone, pick up your case laws. Yesterday we had ended here ICDS. Let's continue, guys. We'll write very simple two case laws, Manju and Co. This Manju got lucky. Casual income will always capital, guys. So you know the important. Always be taxable. IFOS. Even if assessee is a seller of lot. Next. Rama multiplied. Even Ram is listed, right? So you're just random shortcuts to help you. Interest. One. Share. Station money. Kept in bank. Will be considered. What documents while dictated, guys? Interest earned on share application money kept bank will be considered under EGBP and adjusted against share application and adjusted against IPO will be considered under. Just checking, guys. What if they are just made an FD in the bank? But because this is related to the IPO, so it got reduced from the IPO expense. Yes. All right. So almost the end of the day. But what I try to do the end of the day, I try to put everything together. What we've learned today. We started with the exempt incomes, just revising the main sections. As rulers 1019 A, 1023C. Colleges. What are the three conditions? Not profit, government, and the turnover should be up to 5 crores. Then, guys, money from tea board, coffee board, etc. All that is exempt. Yes, we had seen that. And then we saw 10 AA. A is awesome. You have to go to SEZ and you have to export from there. The benefit is for how many years? 15 years. First 5 years, next 5 years, next 5 years. But condition is I'm in the 15th year. My profit, guys, that SEZ PE is 3 crore. Put that 3 crore in a separate account. Guys, when do you put it? Tonight you have to put it? No. When you file your return, before that you have to put the money and use the money in the next 3 years. Guys, this is reinvestment reserve account. Fit. Create insurance telegram. If it's there in your turnover, remove it. If it's not there, no problem. In total turnover also, export turnover also. And guys, if I'm saying my export is 3 crore, etc., I should get the money within how many months? 6. If I get only 2 crore, only export will be considered as 2 crore. Basically, they're trying to reduce your turnover, so reduction also reduces. And the number is SEZPE. I'm in the SEZ area, but I don't export. No benefit. I'm in a non-SEZ area, but I export. You have to be in the SEZ area and you have to do. We ended it there. Then we started IFOS. We've done gift taxation. We've done dividend taxation. I'll give you some handwritten notes over these, which you can write for tomorrow. And if you can't write for tomorrow, at least just see how much space you need to see early so that we can continue tomorrow. Just setting the stage up for tomorrow, guys. Tomorrow we'll be doing IFOS. We'll be completing the concepts on IFOS. We'll be seeing how many extra handwritten notes we can do. And then we'll be moving to sums because IFOS is the practical chapter which comes in the exam as well. And in part of the sums, we'll also see how IFOS sums are asked in the exam also. And we'll do those exam questions. Yes. So I'll see you guys now tomorrow. Tomorrow is Friday. So I'll see you guys again same time. Saturday, there's a clash between audit and this class. Saturday or Sunday? Sunday. Okay, no problem. So at least for tomorrow, it's same time, 6:30 tomorrow. Thank you so much.